So day one will be streamed on YouTube also. So let me check whether everything is proper or not on YouTube as well. So welcome everyone. Okay, let us check. Okay. Yes, I guess it is absolutely proper. So just confirm whether you are able to hear me, whether you are able to see me, everything seems to be proper or not to you. Just confirm. Just write yes in the chat box, okay? Or just write all good in the chat box. Okay, this looks good. Yes, everything seems to be proper. Okay, okay, thank you. Thank you, Yash, for confirming. Thank you, Manali, for confirming. Okay, chalo, let's start. So, welcome to this amazing batch where we call this CA Final Financial Reporting 100% English batch, right? So, everything seems to be proper. I've just confirmed from my students whether everything seems to be proper or not. So, good evening, all of you, first of all. I'm very much excited for this batch, but before starting this batch, or before starting the details of this batch, I would like you to tell me when is your attempt and from which city do you belong, right? Okay, Nishita says she's from Chennai. Okay, when is your attempt? Hello Sanket, hello Yeshu Raju, hello Mary, hello Yash, hello Manali, hello Hima, hello everyone. Okay, Kolkata. Okay, someone is from Kolkata. Okay. Okay, good going. November 24, May 24. Okay, Hyderabad. Oh, Rohit is here. Okay, Ajay says May 24. Okay, says May 25. Okay, says November 25. Okay, good. So, just to clarify, let me just tell you. Okay, Anshika. Okay, Rohit. Okay, Nabil, Coimbatore. Okay, Ajay, Bangalore. Great. And many others. Okay, perfect. So, let me just clarify, this is a 100% English batch suitable for those students who are not very comfortable with Hindi but wanted a 100% English batch. Okay, so in this batch we will try to cover everything in 100% English. Okay, so let's start the discussion of this batch. So now we are not going to directly start with the content. I have some questions for you. I have something to discuss before we start. I have some approach to be discussed because it is going to be very important, right? Okay, let's continue with our discussion, and I want it to be interactive. Okay, my level of teaching depends on your level of interaction. If you are interactive, my teaching will be very high. You will see a very high energetic teaching in me, right? But in case if you're not replying to me, then in that case you will see that, sir, your energy is going down. So my level of energy depends on your level of interaction. So you will have to answer, because see, I know everything in FR, right? For you to be able to give answers, that will be a confidence booster for you, and that is the only way through which you can also know FR very well, right? So you have to keep on giving your answers. Okay, deal? We said a deal or no deal? Deal. Okay, deal done, sir. Okay, so let me also know target marks. First question is, what are your target marks in FR? If you have joined my batch, you might have some maybe set target for FR, that I want to score certain number of marks in FR, right? So what is going to be a target in FR? I want to know. I am very eager to know your target in FR. Okay, Srinivas says 80 plus. What about others? Okay, 70 plus. Okay, just 65. Okay. What about others? 70 says. Okay, Naveen says 70. Okay, what about others? 65, 70 plus, 50. Okay, Nabil says 50. This is very bad. Okay. Sanket says 100 plus. Okay, Anup says 78. Okay. Rohit says 100. Okay, very good. Exemption. Okay. See, I'll tell you one thing. If you have joined this batch just to score 45, 50, 55, then you don't need me. Okay. You can score this much marks by studying self also, right? To be very honest, your target should bare minimum be somewhere around 80 plus. You can say 80, 85, 90. This is somewhere between which your target should lie. I'll tell you the reason also. Just try to remember your 10th standard and when you gave exams, right? So we also had a aim to score a certain number of percentage. If we used to say that we want to score 90%, we never scored 90%. We always scored just below 90, 87, 88, 85, right? If we had a target of 80, we just fell below that, 78, 79, 75%, right? But have you heard someone who has kept a target of 60% and got 90%? The answer is no, right? So when you are keeping your targets, at least at that point of time, it should be high, right? And when and you don't know the conditioning of mind, when you try to aim for something big, maximum times you will achieve it, maximum times, or you will just achieve it or miss it by 1 or 2 marks. So that is why today I want you to keep a good target for yourself, right? And FR is a scoring paper, and why not aspire for a rank also? Because if you want to now you will say, sir, rank is a very big target, how do we get a rank? We did not get a rank in Inter also. There are so many rankers who did not get any rank in Inter, but still they got a rank in final, you know. And what is required, what effort is required to get a rank, I'll also discuss that. But why not aspire for a rank, right? At least aspire now. As I said, if you don't aspire, the answer will always be no, right? So at least aspire for a rank. Even if we fall, at least we will fall with first attempt CA, right? That's why. So I'm guessing that if you're joining this batch, let's consider the immediate attempt which you're going to give is your first attempt, and that should be last attempt as well. We have to clear it. Okay, clear? Okay guys, great. So your target should be somewhere around 80, 85, 90 bare minimum. Okay, great, works. Just keep confirming whenever I'm asking you something. Okay, works. Now what about books, sir? So you will get 4 volumes. 2 volumes will be concept book, 2 volumes will be question bank. Okay, if you have received it, very good. If you have not received it, you will receive it in a while, don't worry about it. Okay, what about notes preparation along with the books? Because this is FR, whenever required, I will make you write in your book. So you will have to keep a notebook handy with yourself. This is not any, what you can say, satsang, where you are just listening to me and you are saying, oh, wow, sir, you speak so nicely. That is not the motive of this batch, right? So you will have to keep on preparing the notes whenever I'm asking you to do it. Okay. Of course, whatever I write on the board, it will be uploaded in the drive. But still, you will have to prepare your own notes, because however bad your writing is, at least we can understand our own writing, right? So it is very important to prepare your notes. So just prepare a small notebook, not small notebook, at least 350-400 pages notebook will be required for this. Okay. Also, let me tell you one thing. I belong from north side of India. Okay. So I am very used to talking in Hindi. So there might be times where I might throw certain words at you in Hindi. So in case if you are not able to understand, just let me know. Okay. So because I'm very used to talking in Hindi, right? Of course, this batch is going to be in 100% English, but you can say now, I can say sometime my English is over. My all vocabulary is over. So just let me know in case if I by default use some Hindi words and you are not able to understand. Okay, don't worry about it. Okay, now let's talk about the approach. What is going to be the approach in this batch? So first we'll focus on conceptual understanding. Okay, so most of the students ask me whether FR is a theory subject or practical subject. Never call any subject theoretical subject. Instead of theory, let's use the word conceptual. Okay, theory seems to be a very negative word. As soon as you hear the word theory, it is like it's going to be boring, right? So let's not say theory. In all the subject, you include any subject in this world, they will have concepts, they will have questions. Of course, in FRU, most of the chapters, or we can say 100% of our syllabus is IND AS. Like in interview, we used to have AS, in FR we have IND AS, right? So because of IND AS, the concepts are more, but when questions are asked in exams, numerical questions are mostly asked in exams. Let's say 75-80% paper will be based on numerical questions, right? So you cannot say that FR is a theory paper or it is a practical paper. It is a mixture of both. For that matter, every paper is a mixture of both. Right. So first we will focus on conceptual clarity. We will solve adequate questions which are required for us to crack that golden number of 80 plus, right? Don't worry about it. Okay, that I will give you in the class itself. Also, the major key with this batch is going to be retention. Why? FR is one subject which students opt very early in their studying career, right? Very early in their studies, they opt for FR. So the main issue is when they are doing FR, they just keep on looking at the lectures, and then after 6 months when they open their book, it is like abba dabba jabba. They are not able to recall even a single word. So how can we improve on this aspect? There will be 2 things which we need to do to improve on this. First thing, whenever I am teaching you anything in class only we will revise it at least 2 to 3 times. How come, sir? Once I explain the concept, I will repeat it again, one revision. As soon as the full concept is over, I will revise it again, second time revision. When the full class is over, whatever we have studied in this 2.5 hours, 3 hours, I will revise it again, third revision. So in class only, and also when we are coming back the next day, we will try to revise everything once again, right? So at least 3 to 4 times we will try to revise in the class itself, but that is not enough for retention. One expectation I will have from your side as well, that you will also have to revise it on a daily basis. You have to revise it on a daily basis. Whatever I'm teaching you, as soon as you attend the class, you have to allot a daily 30 minutes time span to revise everything whatever you have studied. That is what I require from your side. So let's take a pinky promise with each other. Okay, now you will move your hand out and give me a pinky promise that, sir, I give you a pinky promise that I will revise everything whatever we have studied on that same day, because that is the utmost important thing. I will push you on a daily basis, right? I will ask you every day whether you have done the revision or not, but of course some level of commitment will be required from your side as well. Is this absolutely clear to everyone, guys? Yes or no? Yes or no? Okay, done. So do you give me the commitment? Just write PP in the chat box. If you are giving me pinky promise, just write PP in the chat box. Okay, sir, we give you the pinky promise that we will revise everything on a daily basis, right? So for retention, we have two aspects. One, multiple revision in class itself. Second, I will force you on a daily basis to revise everything whatever you have studied. Okay, cool. Okay, everyone says pinky promise. Okay, sounds very funny, but it's fun. Okay, what else from apart from this? So every Sunday we will try to have a test. Monday to Saturday we will keep a classes, and Sunday we will keep a test. If you are watching live, you can give the test on Sundays. Also, if you are watching recorded, you can give the test as per your own convenience. I will just keep you informed that from which chapter to which chapter we are going to test on Sunday. Okay, don't worry about it. So test will be available on your Google Drive only. You can give it whenever you are comfortable. Mostly I will keep you guiding regarding when to appear for the test, so don't worry about it. Okay. Okay, love from Chennai, anyone says. Okay, thank you. Revision sessions, as I mentioned, it will be done. Doubt solving. So the Google Drive link which you must have received will contain a Word file. It will have two links. One, the group of the Telegram. Second, my personal Telegram ID. So you can ask me any doubts through my personal Telegram ID, because it gets very easy for me also to reply to your doubts. So don't worry, you can ask me doubts. Generally you will get a reply within 1 day. At max it might take 1.5 days, but generally I reply within less than 1 day only. Okay, so don't worry about it. Okay. Okay, AK works. Okay. Okay, so I guess you are comfortable with these things. Now what do I expect from you? Let me tell you these facts as well. Okay. Okay, Jessica. Okay, Hima. Okay, Ajay. Very good. Okay, let me tell you some few things which I will be expecting from you as well. Okay, first and the foremost thing, you have to get your why cleared. That why have you come in this course? This why should be very clear with you. Sir, what sense does it make to get a why cleared for CA? I'll tell you. Generally I give a very common example. I'll give that example to you as well. Okay, so let's suppose this is one building. Okay, this is one building. You are standing on top of this building. Okay, and this is another building, and I'm telling you to go from this point to this point through terrace which only has one plank. There is a very thin plan on the terrace which is kept from this terrace to this terrace, and I'm telling you to walk from this plank to this point to this point. Will you do it without any reason? Will you walk? Will you take such a big risk? This is a 14-floor building. Okay, I am telling you to go from this point to this point through terrace through a plank which is very thin. Will you do this foolishness, or will you do this for nothing? You are asking me why should I do this? I'm saying just for fun. Will you do this? The answer is of course no, right? You will say, sir, nothing is written on my head to do these kind of things, so of course you will not go, right? But let's suppose, okay, I'm just giving an example. Okay, let's suppose you are married. Okay, let's suppose you are married, right? And you have a child which is thus 2 or 3 years old, who is stuck here, and this building has caught fire. This building has caught fire, and your child is stuck here, and there is only one way of going from this point to this point, and that is through this plank. Now will you do it? Now will you do it? The answer may be yes, right? Because you have a strong reason to do this activity. Same thing happens with each and every thing you want to achieve in life. If your why is clear, automatically you will work hard, automatically you will be disciplined, automatically you will be consistent, automatically there will be no requirement for anyone to tell you that you have to work hard, right? So if your why is clear, it becomes very easy for you to do any particular job. That is what I'm saying, that your why should be absolutely clear to you. It can be monetary reason, it can be because of respect, it can be for your parents, it can be for anything in this world, but it should be a very strong reason, right? So your why should be clear. Of course, during the batch I will tell my journey also, I will tell my why also during the batch, not today. But today one thing you will do is, on the first page of your book, after the lecture gets over, you will have to write a why it is very important for you to become a chartered accountant. Works for us? Okay, great. The second point is trust me. Now, why is trust important? Because once you have chosen my lectures, you have to trust me. The depth which I will ask you to get into, for that you have to trust me. When I'm saying you that this chapter requires a lot of depth, we have to give much more time, you will have to trust me. When I say that this chapter does not require such depth, you have to only study this much, you will have to trust me, right? When I'm telling you that you have to revise on a daily basis, you have to trust me. So whatever I'm saying to you, you have to trust me on that aspect, right? Okay, so have some trust, because it may be studies, it may be relationship, nothing works without trust. Sir, now we got your point. Okay, sir. Works. Let's proceed further. This is FR and not a theory subject, so you have to write and practice as much as possible. Okay. Love from a large batch, you are very cute. Hey, don't tell me cute. Okay, anyways. Okay, self study, as I already mentioned, you have to give your daily 25-30 minutes of daily revision. Apart from this, 4 important points. You should have a positive mindset. You might have heard from your seniors that FR is lengthy, FR is difficult, CA final is difficult, CA final is lengthy. You might have heard all these things, but you have to keep a positive mindset. I'll tell you why. If you are negative about your CA final preparations, if you are negative about any subject or that studies will never give you any comfort zone, right? If you are, at least you should have faith on yourself that I can achieve something, that I can do this, that I can clear this subject, I can score in this subject, I can clear my CA final. See, CA final is not difficult. If it was difficult, then how it is possible for anyone to clear these exams? If even 10% people are able to clear in every attempt, then why can't you be in that 10%? If you have cleared your CA Inter, that means you have the caliber. Even CA Inter was lengthy, even CA Inter was difficult, still you have cleared it. That means you have the potential to clear your CA final as well. It's just that you have to have faith in yourself. It's just that you have to have the positive mindset. Works, sir. Okay, let's proceed. Hard work will be required. As I already mentioned, you have to be disciplined. If you are watching live lectures, come live on a daily basis as much as possible. If you are watching recorded lectures, you have to work hard. You have to watch the lectures on a daily basis. You have to be disciplined. You have to maintain the consistency. See, initial 10 days, everyone will be motivated to watch the lectures. It's the person who is even consistent, who is having the discipline on the 11th day as well to watch the lectures with the same passion, to revise everything on a daily basis. So do remember, hard work with discipline and with consistency is very important. If you are able to exercise this, definitely you can clear exams easily. Okay. Good evening, sir. I'm from Kerala. Cleared in May 23 with a fast track class. Thank you so much. Okay. Someone has messaged on YouTube. Thank you. Okay. Works. Okay. At last, why fear when AK is here? In Hindi, I tell this phrase as bhai aaya hai sab kara ke jayega. You might not understanding, but this means your brother has come. He will teach you each and everything. Don't worry about it. So why fear when AK is here? In English, we will say this: why fear when AK is here? Okay. Thank you. Okay. So this was some basic you can say mindset which was required from your end. Okay, so please make sure that you are exercising all these things. Okay, okay sir. Now let's talk about the subject. Acha, what about you sir? So let me give a brief introduction about me. My name is Aakash Kandoi. I am a chartered accountant. I've been teaching this subject since last 5 years. I feel this is more than sufficient because we are not here to talk about me. We are here to talk about the subject. So let's start with the subject, sir. Okay. Let's start with the subject. So, financial reporting. Acha, tell me one thing before we discuss this subject. Can you see? It's not accounts. Financial reporting is ideally very much linked to accounts. But the name of the subject is not accounts. It is financial reporting. Can you tell me why? Why can't we keep the name as accounts, advanced accounts, bookkeeping? Why is the name financial reporting? Why is the subject name financial reporting? Can anyone get me through this? Why it is so? See, ideally this won't be asked in exam. But you are studying a subject, at least you need to know the logic behind that subject. Okay, reporting to the shareholders in a broader way. Okay, Nishita has given me one answer. What about others? Okay, okay, reporting. Because here we report stuff. Okay. Because we already know the accounting, we are reporting here. Okay, okay, getting some good answers and some sort of accurate answers. Okay, so let me give you the right answer for this. See, in this subject, you are not going to learn what is debit, what is credit, what is ledger, what is journal. They expect that you already know the accounting aspect of this subject. You already know how to post things, how to record things. Here we will learn how to report these things to the shareholders, how to report in your annual report, how to report all the transaction in the notes to accounts, what all things need to be reported. So basically here the fundamental logic is not behind accounting. Here we will study maximum things related to reporting. That is why the name financial reporting. Okay, okay, I guess works. Okay, great. Let's proceed further. So in FR you will have a paper of 100 marks. Generally 30, as per the new syllabus, 30% is going to be MCQs, 70% is going to be descriptive, and in descriptive you might have some option as well. You can leave some question and options like you used to have in inter as well. Okay, but still 30 marks MCQ, 70 marks descriptive. We will prepare for both. Don't worry about it. When you're conceptually clear, you can crack any. You can crack MCQs also, you can crack descriptive also. Don't worry about it. Okay. In FR syllabus, I have broadly divided this subject into two aspects. See, you can see the two aspects here. Let me explain. In FR, you have 35 IND-ASs. Ideally, there are 39 IND-ASs, but in CA final syllabus, 4 IND-AS have not been introduced. So, ideally, you have only 35 IND-ASs. And 4 miscellaneous topics. These topics are also interlinked to IND-AS only. So, whenever anyone asks you, what is the syllabus of FR? You will say IND-AS. You have only IND-ASs in your syllabus. What is IND-AS? We will discuss at a later stage, right? But like you used to have AS in your inter, right? In inter you had some chapters also and AS also. In financial reporting you only have IND-AS. Sir, then what will happen to AS if IND-AS have been introduced? We will discuss that as well. Don't worry about it. Okay. So in FR we have IND-AS. IND-AS means Indian Accounting Standard. The full form of IND-AS is Indian Accounting Standards. And you will have 4 miscellaneous topics. So now I have bifurcated this 35 IND-ASs into 2 aspects. This bifurcation has been made by Aakash Kandoi. This bifurcation has not been made by ICAI. Let me just clarify this to you. So sir, why is this bifurcation required? Once you are studying, once you are through with the whole FR, at least you should know now that which aspect has how much weightage, right? So I have divided this full 35 IND-ASs into 2 aspects. One is big practical IND-AS and one is small IND-AS. The big practical IND-AS comprises of 12 IND-ASs, right? And the balance 23 IND-AS will be covered under small IND-AS category. Okay. These 12 IND-ASs have a weightage of approximately 50%. Approximately, right? So these big IND-AS comprise of how many topics, sir? 12 IND-ASs, but there are not 12 topics. There are only 6 topics. Sir, how is this possible? Because let me give an example. These 12 IND-ASs have the first chapter as financial instruments, in which 3 Indies are getting covered: 32, 109, 107. Okay, so that means it is possible that one topic might cover 2 or 3 or more than that indices. That is why we have 12 indices in this category, but only 6 topics will be covered, right? So, sir, but we don't know the name of the chapter. We even don't know the numbering of the chapter. Sir, do we need to memorize it? The answer is no. Once I teach you all the indices, it is my promise, it is my guarantee that you will be able to remember all the names along with the numbers very easily. So you need not give that extra effort in remembering the name and numbers. As of now, you are not, let's say, I have not taught you anything. So just see it and move on. Just refer it and move on. You are not expected to know the name of the chapters or number of the indices as of now. I am just giving you a brief idea of what the syllabus comprises of. Okay. So the first topic is financial instruments, which has 3 indices. Okay. Second topic is business combination. What is business combination? It is an elder brother of amalgamation. Big brother of amalgamation. You used to study amalgamation AS14 in Inter, right? So upgraded version of amalgamation is business combination. Okay. Then we have consolidated financial statements. It comprises of 5 indices: 27, 110, 111, 112, 28. Sir, how is this numbering? So vague, so weird. Don't worry, you will understand everything as and when we progress. Okay? Okay. Yes, Mohit, you can attend recorded also. Don't worry about it. Okay. Next is share-based payment. What is share-based payment? ESOP. You had a topic in CA Inter named ESOP. In final, the upgraded version is share-based payment. Index 102. Then you have Index 115 revenue, Index 116 leases. These are the 6 topics. If you count the number of standards, will comprise of 12 indices. Why I have categorized this into one aspect? Because generally these topics come in every attempt. At least 4 to 5 topics out of these will always come in exams. So sir, it becomes very easy. Let's only study this much. No, you won't do it. Why? Because our target is not 50%. Na? Our target is getting 75, 80, 85, 90. Right? So we have to be efficient with all the topics. But at least you need to understand the bifurcation. So these 6 topics are always asked in exams in most of the cases. Sometimes it might happen they might not ask this or they might not ask this. But other topics are always asked in exams. Okay? Has a weightage of approximately 50%. So out of 35 indices, 12 indices are covered under this. How much is the balance? 23 indices, right? 35 may say 12 is gone. Then the remaining balance 23. These I will categorize as small indices. These 23 indices and the miscellaneous topics approximately comprises of 50% weightage. These 23 small indices and these miscellaneous topics comprise of remaining 50% weightage. Of course, this is not going to be exact. Sometimes it might happen that they might ask 45% from these topics and 55% from these topics. It might differ, but on an average, it is going to be 50-50 only. Okay, so small indices and these topics will have a weightage of 50%. Now, what all indices are going to get covered in the small indices, we will study as and when the batch progresses. Okay, what about miscellaneous topics? So we have 4 topics in miscellaneous category. The first one is analysis of financial statements. So basically this is nothing but a topic which covers each and every index. So there are going to be many case studies which we'll discuss, but this can be studied only once you have done with the whole FR, right? So we will do this at the end. Then there is ethics and technology. These 2 topics have been newly introduced in your new course, right? So again, these topics you will understand better once you have studied the whole FR. Apart from this, for few indices, let's say for 3 to 4 indices, we also have to study the difference between AS and IND-AS. We do not have to study this for all the indices, let me tell you. See, we have approximately how many indices? We have approximately 35 indices. So for all the 35 indices, we need not study the differences. For only 3 to 4 indices, we have to study the difference between AS and IND-AS. Which are those 3-4 topics? I will tell you as and when those topics come. Okay, don't worry about it. So this is your rough syllabus. So in short, if I want to summarize, I will always say my FR has IND-AS. The syllabus of FR is 100% IND-AS. Is this clear to everyone? Can everyone just give me a confirmation regarding the same? Are you clear with this? Just tell me yes or no. Yes. Yes or no? Oh, yes or no? Dashing to the snow. Okay. Okay. Clear, clear. Yes, 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 yes. Thank you for confirming, guys. Let's proceed. Let's proceed further. Okay. Now, we are going to start with our first topic for today. Right? So, I would like every one of you to remove your notebook and give the heading Introduction to Ind AS. Give the heading Introduction to Ind AS. Okay. Okay, Ajay. Okay, Manoj. Okay, Hima. Okay, everyone. Thank you so much. Okay. Let's give this topic Introduction to Ind AS. Right? Okay. Let's proceed. Now, what are we going to study in this topic? Going to be a small topic which we will cover today itself. In this topic, what we are going to do is we are going to discuss when was index introduced, how it was introduced, how does the numbering system work, and why there was a requirement to introduce indices. Right? We are going to study all these things. So let me ask you one question. In India, we always hear everyone telling that India should develop, India should go global. Have you heard this? India should go global. For India to go global, we have to do tie-ups with foreign companies. We have to raise funds from foreign companies, right? We have to collaborate with foreign companies. You might have heard this, right? So for India to go global, the biggest issue was whenever you want to raise any funds from foreign company or whenever you want to do any collaboration with the foreign company, what will they ask from you to judge that whether you are capable enough or not? What will they ask from you? Perfect answer. They will ask financial statements. They will say, okay, let's say for example, Manoj, we have Manoj Limited. So Manoj went to foreign. He was saying that I want to expand my company. So what will the foreigners ask? Mr. Manoj, give me your financial statements. But because the financial statements of Manoj was prepared as per AS, the foreign companies were not able to understand anything. Why? Because AS are very conservative. In AS, we keep everything at cost. Right? The format of AS is different. The structure of AS is different. So for foreign companies to understand our financials, it used to become very much difficult. Right? And what are currently foreign companies following? So most of the developed countries are following IFRS. Most of the developed countries are following IFRS. What is the full form of IFRS? It is, you can write it down. It is International Financial Reporting Standards. It is International Financial Reporting Standards. So most of the foreign developed countries are following IFRS. And in India, we were following AS, which are very conservative, which are very, you can say, of old traditional thought process. Right? Now, in India, to go global, it was very important to introduce some standards which are in line with IFRS. We had to introduce the standards which are like IFRS. So we had two options. One, either we can adopt IFRS as it is. Or the second option was we can make our own standards. Make in India concept. We can make our own standards based on IFRS. Where we will not say that we have adopted IFRS. We will only say that we have taken some inspiration from IFRS. So what does this mean? For example, you have, in India, in Bollywood, there is a lot of copying going on. They always keep on making remixes of the old songs and do blunder with that, right? So they never say that we have copied. They say we have taken inspiration and added our own flavor. In India also, they had two options. Either to copy it as it is or to take inspiration and add their own flavor as per the Indian economy. Because IFRS is very open-minded. In some aspects, the Indian economy will not suit for IFRS, right? It will be not suited for Indian economy if we adopt IFRS as it is. So India opted for the second option. They thought, let's not adopt IFRS as it is. We will say that we are IFRS converged. What is the meaning of converged? Converged means we have taken inspiration from IFRS. Like we will copy IFRS in all the aspects, but wherever our economy doesn't support any provision, we will change the provision as per our own economy. That means we are not adopting IFRS as it is, we are converging. We are converging, yes. Okay, so if you are IFRS converged, okay, also what is the full form of Ind AS? You can write it down. It is Indian Accounting Standards. It is Indian Accounting Standards. So now we can say that we are IFRS converged, right? We can say it easily that we are IFRS converged. That means you can say that Ind AS and IFRS, can we say that these are 95% same? I can say it, okay? So let me tell you, because we are IFRS converged, so we can say Ind AS and IFRS, the concepts are 95% same. 95 to 97% is same. Right? So that means if it is 95% same, there are some, can I say there are some differences between Ind AS and IFRS as well? There is going to be some differences between Ind AS and IFRS as well. The answer is yes. So that means there will be differences between Ind AS and IFRS. So what will be these differences known as? These differences are known as carve-ins and carve-outs. These differences are known as carve-ins and carve-outs. Sir, what is now why they have given two terms, carve-ins and carve-outs? Previously, the discussion was required, but in your FR syllabus, we need not know IFRS. Of course, in various indices, you can see ICA has given which provisions differ from IFRS, but in your syllabus you only have Ind AS. So because you only have Ind AS, you are not required to know what are the 5% differences between Ind AS and IFRS. You are not required to know this, right? But you are just required to know that there are some differences between Ind AS and IFRS, and these differences can be categorized into carve-ins and carve-outs. This is only thing which you need to remember. Okay? Yes. Yes, Naini, it is available. Okay. Yeah. Is this aspect clear? Yes. Okay. Okay. Now, in IFRS, now let me go to another aspect in this. If I talk about IFRS has total two types of standards. Like in India, we have two standards, AS and Ind AS. See, AS haven't been scrapped. AS are also still used, right? You can say that the smaller companies, the partnership firms, the HUF, the sole proprietorship will use AS. The bigger companies who want to go global, they will use Ind AS. The logic also is very clear now why we want Ind AS. You remember Manoj who wanted to go global? Yeah, that is why. So in India, we have AS also, we have Ind AS also. Likewise, internationally also, under the brand of IFRS, there are two types of standards. One is IAS and one is IFRS. Sir, now what is this IAS? What is this IAS, sir? So in such a manner, we were able to understand what is Ind AS. Then we came to know what is IFRS. Then you introduce another term, what is IAS. It is getting confusing, sir. Don't worry. Let me explain. What is the meaning of IAS? The full form of IAS is International Accounting Standards. The full form of IAS is International Accounting Standards. Right? Now let me ask you few things. Okay. In India, likewise we had AS. Then we introduced Ind AS. Similarly, globally, before IFRS, there were IAS. Previously, there were no IFRS. There was only IAS, right? So let's say previously they had IAS numbering 1, 2, right? Numbering 1, 2, 3, 4, 5, 6, 7. Let's assume this. They had IAS numbering 1, 2, 3, 4, 5, 6, 7. In the century. Okay, 1990s, 1980s, they had this IAS. Okay, now even these were very old, right? Even these were very old. So what they did internationally was they went on rechecking each and every IAS. If they felt that this IAS is not as per the current economy, it is not as per the current practices, they used to scrap that IAS. Let's say, for example, they referred IAS number 1, they saw it and they said, it is fine, it is normal only, it is accurate as per our economy, no problem, approved. Okay, they referred IAS 2, they saw it and then they said, oh, okay, this is also approved, no problem with this. Then they saw IAS 3 and they said, this is very, you can say now, this is very traditional, this is not as per the current economy, this is not as per the current practices. So what they did was they scrapped this IAS 3 and they revamped the whole accounting standard. And when they revamped the whole accounting standard, they started issuing the new standards under the brand name of IFRS. Whenever they used to scrap any IAS for revamping, they used to scrap it and issue it under the brand name of IFRS. So let's say, for example, this was not the case, but let's take in for example, they scrapped IAS 3 and they issued IFRS 1. They scrapped it, they revamped it and they issued a new standard IFRS 1. Okay, then they referred IAS 4. Okay, they saw it was very traditional, not as per the current practices. They scrapped it, revamped it and issued another standard, IFRS 2. They saw number 5, they saw it, okay, not as per the current practices, revamped it, issued a new one, IFRS 3. See, the numbering was not this, what I'm saying, the numbering was not this. One sec. Okay, the numbering was not this, that they have cancelled 3 and issued 1. This was not the numbering, I'm just giving an example, but this was the case. They were scrapping this and issuing under the new brand name, right? Then they saw 6, not as per the practices, issued something new. Then they saw 7, they said, okay, this is as per the current practices, no problem with this, no need to revamp this. So currently, under the brand name of IFRS, wherever IAS were accurate, IAS are still ongoing. Wherever they were not accurate, they have issued something known as IFRS. So that means internationally the word IFRS includes two things. They include IAS also, they include IFRS also. So internationally both are getting followed. IAS are also being followed because for the items where IAS is there, IFRS is not required. But for the items where IAS was revoked, IFRS was issued. Right? So internationally these two both are ongoing. So when you say that internationally IFRS is being followed, it is inherently implied that internationally both these are being followed. Now India has to adopt, India has to converge both these into Ind AS. India has to converge both of these into Ind AS. Okay. Now, sir, why can't AS also be scrapped to make it globally recognized? Because you will understand, Nishita. Okay, you will understand this. Don't worry. Okay. So now, how has the numbering been? Did you understand what is included in IFRS? Okay, sir. Now, when we try to converge from these to Ind AS, we had to also decide on the numbering aspect. So what we did was, for every IAS, we issued a new Ind AS. So let's say there was IAS 1. Let's say there was IAS 1. So what we issued was Ind AS 1. Let's say there was IAS 2. So what we issued? Ind AS 2. Let's say there was IAS 7. What did we issue? Ind AS 7. What did we issue? Ind AS 7. Right? So for each and every IAS, we kept the numbering same. Just instead of IAS, India used the term Ind AS. Okay? But now what about these IFRS? For IFRS also we need to adopt Ind AS. So if we kept the numbering of IFRS as 1 as well, let's say this is IFRS 1. So in India, if we kept this number as 1 only, then it got very confusing. Because Ind AS 1 is IAS 1 or Ind AS 1 is IFRS 1. This will create a lot of confusion among the users, right? So what they did was, whenever for IFRS we issued Ind AS, whenever for any IFRS we issued Ind AS, we started with a series of 100. we started with the series of 100. So let's say, for example, for IFRS 1, we wanted to issue Ind AS. So we called it Ind AS 101. So for IFRS 2, if we wanted to issue anything, we say Ind AS 102. For IFRS 3, if we wanted to issue anything, we said it 103. For every IFRS, that means we started with a series of 100. That is why above also you can see the numbering as 32, 109, 107, 27, 110, 11. That means whenever any Ind AS is in normal digits, it is IAS. It is referred from IAS. But whenever it is in a 100 series, it is adopted from Ind AS. It is adopted from IFRS. Are you able to understand what I'm trying to tell you? Perfect Hima, perfect Ajay, perfect Manoj, perfect Naini, perfect. Okay, everyone. Okay, Sachin. Okay. Vijay Lakshmi. Perfect. Got it. Are you able to understand this? Okay. So that means now see, try to understand one thing. Whenever we say Ind AS 101, that doesn't mean that in India there are more than 100 Ind ASs. No. Whenever we refer 101, it means it is under the brand name of IFRS. That is why you will see in the numbering system there is a lot of gap. There is Ind AS 1, there is Ind AS 2, and there is directly Ind AS 7. There is no Ind AS 3, 4, 5, 6. Why? Because they revoked this and issued a new IFRS. That is why. So you will see a lot of gap in the numbering as well. That doesn't mean 103 doesn't mean that you have more than 103 standards. Are you able to understand this? I hope you are able to get this point. Okay. Also, whenever I'm explaining something and writing on board, you can write with me simultaneously. Okay. That is fine. Okay. Now what I'll do is, let me test your concept. Will you try to answer me? If I ask you something, will you try to answer it? Okay, let me test whether you are able, were you able to understand this point or not. Okay, let's say there is IAS 16. In Ind AS, what will be the numbering? What will be the numbering of this in Ind AS? It will be Ind AS. Perfect answer, 16. Why? For IAS, we kept the numbering as same. Let's say if there was IFRS 10. There was IFRS 10. So for IFRS, can we say it is Ind AS 10? The answer is no. For IFRS, the series of 100. So it will be 110. Perfect answer. It is as simple as that. Sir, is this going to be asked in exams? The answer is no. But at least you need to understand the numbering system. I'll tell you why. Once you open your book, you will 100% get this query that why is there such a gap in Ind AS? Why is the numbering series starting from 100 as well? So you need to know this basic stuff. So don't worry, I will never teach you anything which is irrelevant. Right? Okay, perfect. So maximum people gave the correct answer. Very happy. Very happy. Okay, great. Great stuff, guys. So it is as simple as that. Okay. Then with this point. So this was the numbering system of Ind AS, right? Okay. So in India, if anyone asks you whether Ind AS is applicable or whether AS is applicable, so what will you tell? So you will say both are applicable to respective companies. For bigger companies, Ind AS. For smaller companies, AS. For partnership firms, AS. For HUFs, AS. For sole proprietorship, AS. Right. So for the smaller aspects, smaller categories, AS. Because AS, now people will say, sir, why keep these two standards? Let's ask everyone to follow Ind AS. See, Ind AS covers everything in very much detail. So for the smaller companies to apply Ind AS, it is not very easy. You will also see when you study any particular topic where even AS was there on the topic, Ind AS will cover each and every concept in very much depth. Right? So you can't say that let's keep in line with AS only. Because AS are just guiding from an overall point of view. In Ind AS, it is the guidance is given in very much depth. Each and every aspect is discussed in very much depth. That is why for bigger companies, they can afford to apply Ind AS, but not the smaller companies, guys. Okay, that is why these two standards are still ongoing in India, AS as well as Ind AS. Now, in our syllabus, we only have Ind AS. We neither have IFRS, we neither have AS, right? So let's not discuss about those aspects. Now, when we say that Ind AS are applicable to big companies, which are going to be those big companies, right? So for that, we need to study the applicability of Ind AS, and that is our first aspect which we will cover in our concepts, right? So once you can open your notes, right, it is page number 1.1. So you can see a topic named as Introduction to Ind AS and Schedule 3, right? So today we will cover this topic, Introduction to Ind AS. right? This topic, introduction to Ind AS. Okay, where we will study about the applicability and implementation of Ind AS, like from which year the Ind AS was applicable, right? See, you can see that it was applicable from 15, 16 or 17, but currently we might be studying in 23, 24, 25, 26, right? So sir, are these still applicable for us? The logic will apply, no? The logic will be applicable. So let's study about this. Okay, so now the applicability has been categorized into 4 aspects. See, in companies also there might be a normal company, they might be banks, they might be NBFCs, they might be insurance companies. So whatever we are discussing now, we are discussing it only for the companies, normal companies, which are neither banks nor NBFCs nor insurance companies. So here it is clearly written for companies other than banks, NBFCs, insurance companies. So we are going to discuss the applicability only for companies as of now. In below part we will cover banks also, NBFCs also, insurance companies also, right? So there were 2 aspects of applicability. One is voluntary basis. So Ind AS came in the year 2014. So it was mentioned that the companies who wish to apply Ind AS can apply the Ind AS from 1st April 15 voluntarily if they wish to. Even if they are not meeting any of the criteria, they can still apply voluntarily from 1st April 15. This was known as voluntary basis. It is very simple. Once you read this, I will again take your oral test and then you will be through with it. Okay. So one was voluntary basis, which was applicable from 1st April 15. Another one was mandatory basis. Now what is the meaning of this mandatory basis? That means here some threshold criteria was given and it was bifurcated into phase 1 and phase 2. So under phase 1, which all companies will fall? Here we will cover all listed or unlisted companies whose net worth is greater than equal to 500 crores. So if you have a net worth of greater than equal to 500 crores, you will fall under phase 1 and you will have to apply Ind AS from 1st April 16. See, now the dates are relevant for those companies who were standing during those years. Currently, there is no phase 1, phase 2. Currently, if you meet any of the threshold, you have to apply it. But at least we should know what was the threshold at that time, right? So if your net worth is greater than equal to 500 crores, you might be listed company, you might be unlisted company. You would have to apply Ind AS from 1st April 16, right? This was phase 1. Now what about phase 2? Under phase 2, which all companies were falling? First of all listed companies. Full stop. If you can interpret this point, it is very simple. It is written all listed companies. That means under phase 2, it doesn't matter that your threshold is met or not. If you are listed, you will have to apply Ind AS from 1st April 17. If you are listed, you will have to apply Ind AS irrespective of your net worth. That is the first aspect under phase 2. First type of companies under phase 2. The second type of companies are those which are unlisted. For unlisted, we will check the criteria of net worth greater than equal to 250 crores. So if your net worth is greater than equal to 250 crores, you will fall under phase 2. Now, before we go into the depth of this, let me clarify one thing. Ind AS, if once applicable, it is always applicable. It is such a relation. It is even more deadlier than marriage. In marriage also, at least if things are not working out, you can part ways. Of course, you should not, but just telling you. In Ind AS, you cannot part ways. If once done, if once applicable, always applicable. No scope for divorce also, right? So in Ind AS, if let's say you adopt the Ind AS voluntarily from 1st April 16, once you adopt it, once applicable, always applicable. That means for the future years, you need not check any of the criterias. Once you have applied Ind AS, there is no moving back. Got my point? Don't laugh, okay? Got my point? Yes. For this also, let's say, for example, the net worth of the company is greater than equal to 500 crores. So it will fall under phase 1. So sir, is it necessary for us to check the net worth criteria every year? The answer is no. If you are falling under phase 1, you need not check for phase 2 because Ind AS once applicable, always applicable. So if you are not adopted voluntarily, but you are falling under phase 1, that means if you are applying Ind AS from this year, you have to apply it perpetually. You have to always apply it. You need not check for this criteria. That means we will check the criteria of phase 2 only when you have not opted it voluntarily and you are not falling under phase 1. That is the only time we will check the criteria of phase 2. If you have opted voluntarily or if you have applied it in phase 1, you need not check the criteria of phase 2. I hope this is clear to everyone, right? Now the question arises, the net worth is to be checked for from which date? So the net worth should be checked from 31st March 14 and thereafter. That means you will keep on checking it every year. Like let's say for example, the net worth on, and I'm assuming you're not opted voluntarily, okay? So let's say for example, your net worth as on 31st March 14 was greater than equal to 600 crores. It was greater than equal to, let's say it was 600 crores. So you will fall under which phase? Perfect answer, you will fall under phase 1. Clear? That means you will apply Ind AS from 1st April 16. Okay. If let's say the net worth on 31st March 14 was below the threshold, the net worth on 31st March 15 was 600 crores. So you will apply Ind AS from which date? Still you will apply Ind AS from 1st April 16, because if before 1st April 16, if before this date, in any financial year you meet the criteria, you will apply from this date only. Let's say you did not meet the criteria on 31st March 15. You met it on 31st March 16. The net worth is 600 crores. Still this date is before 1st April 16. So as soon as you meet this, you will fall under phase 1. You will fall under phase 1. That means for you to fall under phase 1, if you meet the net worth on 14 or 15 or 16, you will automatically fall under phase 1. That means the net worth in which the year in which you meet the criteria of net worth, from next financial year, you have to follow Ind AS. See, currently we are standing in 2024, 25, 26 and all, right? As on today, this doesn't matter whether you are falling under phase 1, phase 2. As on today, you have to only check this. If you are listed, Ind AS applicable, or if you are unlisted, net worth is greater than equal to this, Ind AS is applicable. As on today, this is not relevant whether phase 1 or phase 2. Are you getting my point? But when it was introduced, this was very much applicable to you, right? So you must be knowing all these things. So always remember, if before this date you meet the criteria in any financial year, you will apply Ind AS from this date. Let's say for example, you did not meet the criteria on this date. You met the criteria on 31st March 19. Let's say you did not meet till this date. You met the criteria on 31st March 19 directly. So you will apply Ind AS from the next financial, that is 1st April 19. That is in the year 1920. Are you getting my point? So as soon as you meet the criteria, immediately next year you have to apply Ind AS. Okay? Okay, sir. Got my point? Got your point, sir. Okay. So you can write it down here. 31st March 14 slash 31st March 15 slash 31st March 15 or 16. If in either of the years criteria met, criteria met of greater than equal to 500 crores, huh? Then apply Ind AS from phase 1. Apply Ind AS from phase 1. Clear? Clear. Got it. Then apply Ind AS from phase. You have to write this down, okay? Okay, sir. Let's proceed further. Sir, how to remember these dates? These are very confusing. So it is very simple. Let me clarify. When you apply Ind AS from 1st April 15, right? That means your financial year for which you are following Ind AS is 15-16. When you apply Ind AS from 1st April 16, your financial year for Ind AS is 16-17. And when you apply Ind AS from 1st April 17, your financial year is 17-18. Now, how do I remember this? See, each phase has a gap of 1 year, exactly 1 year. So just remember 14, 15, 16. Sorry, 15, 16, 17. 15, 16, 17. So just remember 15, 16, 17. Everything has a gap of 1 year, right? So that means we will write 1st April. Let's say for example, we will write 1st April 15, 1st April 16, 1st April 17. So of course the first will be voluntary basis, voluntary for companies, and the next two will be mandatory basis. In mandatory you will have phase 1 and phase 2. Simple. So always say 15, 16, 17. Voluntary, mandatory, mandatory, mandatory phase 1, mandatory phase 2. Simple. Okay, now let me ask you few things. In voluntary, when the company wants to apply Ind AS voluntarily, do they need to check any net worth criteria? Do they need to check or will they check any net worth criteria? The answer is no. Arey Baba, they are applying it voluntarily. Then why will they check any net worth criteria? They are doing love marriage. Then why will they check the qualification? Now we understood your point, sir. Okay. Now, what about this point? Under phase 1, what was the criteria? Here it was all listed / unlisted whose net worth was greater than equal to, perfect answer, 500 crores. Whose net worth was greater than equal to 500 crores. What about this aspect, this phase? Okay, perfect. Here it will be all listed, unlisted whose net worth was greater than equal to, sorry, not all listed, unlisted. No. First, all listed companies. If you are listed, game is over. You have to apply Ind AS from 1st April 17. Second, all unlisted or unlisted who has a net worth of greater than equal to 250 crores. Perfect answer. All unlisted who has a net worth of greater than equal to 250 crores. Right? Okay. So this was your oral test which you have passed perfectly. Works. Okay. So this was your applicability in case of companies. And Ind AS once applicable, always applicable. So if you have fallen under phase 1, you need not check for phase 2. You have to apply Ind AS. I guess this is clear to everyone. Okay. Also, now let's read this important notes. There are approximately 7 important notes. Let's read all of them, right? Acha, let me ask you one question. Just try to answer it. When we say we have to check the net worth, what is the meaning of net worth? Net worth means share capital plus all your reserves, everything. That is net worth. Okay. So we will check net worth as per AS or as per Ind AS. Because see, I'll tell you, in Ind AS, reserves will include a lot more things compared to AS. Right? So we will compute net worth as per AS or as per Ind AS when we are checking whether Ind AS is applicable to us or not. So we have to check net worth as per AS or Ind AS. So someone says AS, okay. Some people say Ind AS, okay. AS, Ind AS. There is a fight going on. AS, Ind AS, AS, Ind AS. Okay. Okay. Maximum people say AS. See, I asked this question in every batch, but in this batch, maximum people have answered correctly, right? So the correct answer is you will check the net worth as per AS only. Sir, why? Why as per AS? Arey Baba, you have not prepared your balance sheet as per Ind AS. You want to check whether Ind AS is applicable or not. So for that, the balance sheet which you have is as per AS only. Till now, you don't have the balance sheet as per Ind AS. Your audited balance sheet, your approved balance sheet is currently as per AS. We are checking whether Ind AS to be applied or not. So for that, the net worth which is available with you is only as per AS as of now. Got my point? Perfect. That means the net worth is to be checked as per AS. Right? Yes. Hello, sir. I must say to your batch students that sir's scale of delivery of concept, energy and efforts are at best level. Oh, thank you so much, Shubham. Thank you. Got my point? Guys, right? Okay. So net worth is to be checked as per AS. As per AS. Okay. Also. Next thing which we want to discuss in this bracket is whenever you are following Ind AS, do you know that whenever we present our balance sheet or profit and loss or anything, along with current year, we also give one column of previous year. We also present one column of previous year. So let's say, for example, if your current year is 16-17 and Ind AS became applicable from this financial year, so your comparatives should also be as per Ind AS. They should also be as per Ind AS. See, applicability of Ind AS will be this year only, but your comparative should also be given as per Ind AS for comparability purpose, of course, right? This is mentioned here. Whenever you apply Ind AS, you should apply it with comparatives, right? Okay. And for net worth, you have to keep on checking every year after 31st March 14. Okay. Keep this point in your mind. So first point is done, second point is done. Now the third point. Second point was Ind AS once applicable, always applicable, right? Remember that marriage wala example? In marriage, there is a point where we can take divorce. In Ind AS, no divorce is applicable. Okay. Now next point. An entity covered under Ind AS, as per above, will make its parent, subsidiary, associate, joint venture also covered under Ind AS. It is like chicken pox. You have heard this disease, chicken pox? If it happens to someone in the family, it will definitely happen to other people in the family as well. Arey, best example, COVID. Of course, we should refrain from using these terms, but still, I want to give one example, na? COVID, if it happens to you, definitely it will happen to everyone in the family. It spreads. Similarly, the applicability of Ind AS also spreads. If it is applicable to you, your parent, your subsidiary, your associate, your joint venture will also come under the purview of Ind AS. So what is the meaning of parent? You might have heard this term na in your inter. If anyone has control over you, let's say my name is Aakash Limited, my company name is Aakash Limited, BB Virtual has 75% stake in my company. That means BB Virtual is the parent, I am the subsidiary. So if Ind AS becomes applicable to me, it will by default become also applicable to my parent, BB Virtuals, my subsidiary, if any, my associate, my joint ventures. Parent means holding company, right? So it is like a disease which will spread to everyone. It is, if applicable to you, applicable to everyone in your family, right? Now, to do this discussion in a little bit detail, I need to give you one example in a notebook. So let me give one example. So whenever I write NB, NB means notebook, right? So let's discuss one example in a notebook. Why am I giving this reference? Because you should know on which point we have discussed one example in a notebook. That is very important. Is this clear to everyone? Okay, so let's build one example in a notebook. Come. Let's call this example number 1. Okay, let's take one example. Let's say there is one company BB Virtuals Limited. Okay, this is the parent company. Okay, let's say it has two subsidiaries. Let's say it has two subsidiaries. It has one subsidiary AK Limited and one subsidiary SK Limited. Sir, what is AK Limited? Aakash Kandoi Limited. What is SK Limited? Shubham Keswani Sir Limited, right? You might be knowing Shubham Keswani Sir, who teaches audit, right? Okay, so BB Virtual is the parent company. AK is the subsidiary company. Let me call this subsidiary. Okay, and this is also subsidiary. Okay, now is it possible that even this subsidiary has another subsidiary? Yes. So AK Limited has one subsidiary, X Limited, right? So in this transaction, AK is the parent and X is the subsidiary, right? So you can see one chain is building. BB Virtual has one subsidiary and this subsidiary has an investment in another subsidiary, right? So this is a subsidiary of AK Limited. Okay, now let's say that if you ask me whether Ind AS is applicable to BB Virtuals, I will say no. If we see the threshold limit, threshold criteria not met. For SK Limited, the criteria is not met. For this, the criteria is not met. But now see this. This AK Limited has met the threshold criteria, right? Let's say I will say that the net worth criteria met. Ind AS is applicable, let's say. Ind AS criteria met, right? That means Ind AS has become applicable to AK Limited. Ind AS has become applicable to AK Limited. Now, what does that point say? If applicable to one company, it becomes applicable to your parent, your subsidiary, your associate, or joint venture, right? That means because of AK Limited, who all will also get covered in Ind AS? Will the parent of AK get covered? The answer is yes. Parent, subsidiary, associate, joint venture, right? So that means because of this AK Limited, now who will also get covered? BB virtual will also get covered. Ind AS apply cos of AK. What about X limited? For X also I will say Ind AS apply cos of X limited. Cos means because of X limited. But the main question arises is, what about SK limited? Now you know what is this SK called? This SK is called fellow subsidiary. For AK limited, SK is a fellow subsidiary. So what is the meaning of fellow subsidiary? Fellow means they do not have a direct relation. But they both are subsidiaries to the same parent. So they are known as fellow subsidiaries. Now the question is, see, we know that the immediate parent will get covered, the immediate subsidiary will get covered, but what about this fellow subsidiary? So this was not clarified in an Ind AS. So there was one guidance note which was covering this point, and that guidance note mentions that fellow subsidiaries are not covered. Fellow subsidiaries are not covered. That means if Ind AS is applicable to you, your fellow subsidiary need not apply Ind AS. It's fine. Is this point clear to everyone? Yes. So this point will also come in one question. So you need to remember this logic. Clear? Okay. So it won't be applicable to your fellow subsidiary. Okay, sir, got this point. Can I go in a little bit detail with you? Can I discuss something which will require much more depth? Can we get into that? If yes, then I'm very excited. Sir, please don't build suspense, okay? Okay. So let's go in a little bit depth in this because it is required. Now, I'll tell you one more point. I hope this is clear to everyone, okay? Whatever we studied now. I'll tell you one more point. Whenever Ind AS becomes applicable, acha, don't tell this, don't tell this, that, sir, you said that if applicable to one company, its parent, subsidiary, associate, joint venture also gets covered. So that means if because of AK it becomes applicable to BB virtuals, so now BB virtual is applying Ind AS. So because of parent company, SK should also get covered now. You will not look in this manner. You will see to whom it was applicable directly, and to whichever company it was applicable directly, only to its direct members it will get applicable. Now because it got applicable to parent, that doesn't mean it will apply to this subsidiary also, because it was not directly applicable to parent. To parent itself it got applicable indirectly. Please remember this point, okay? Some students might have this query, why SK is not getting covered because of BB virtuals? Because BB virtual got covered under Ind AS, not directly. It got covered indirectly. Do remember this point? Okay, sir. Now, you need to remember one point, that application of Ind AS, when we say that Ind AS is applicable to you, that means it will apply in both standalone as well as consolidated financial statements. Now, what is the meaning of this point? You might be knowing that whenever you are a parent company, as a parent company, you will have to prepare two types of financials. As a parent company, the parent will prepare one financials where it will have only the data of parent, that is known as SFS. You can call it standalone financial statements, separate financial statements, only of parent. Only of parent. And one financials the parent has to prepare is perfect answer CFS, which will include information of parent plus all subsidiaries. CFS, consolidated financial statements, which will include data of parent plus all subsidiaries. Right? Okay. Now, when I was saying that let's go in some depth. Okay. So before going into that, we can say BB virtuals will apply Ind AS, AK will apply Ind AS, and X will apply Ind AS. But SK will apply AS only, na? This SK will apply AS only. AS is applicable. Okay. Got this point, sir. Now, I will require your 100% attention here. Okay. This point is covered in one question also. Please remember. Okay. For CFS, the CFS will be, parent has to apply Ind AS. Okay. Ind AS has become applicable to parent. So for the purpose of CFS, parent has to prepare CFS as per AS or as per Ind AS? Sir, CFS is to be prepared as per Ind AS only, because Ind AS has become applicable to parent company. That means CFS will be prepared as per Ind AS. That means for the purpose of CFS, parent will require the data as per Ind AS. Parent will require its own data as per Ind AS. Parent will require the data of all subsidiaries as per Ind AS. Right? That means parent, when doing consolidation, it will require the data of AK as per Ind AS. Right? Also, even X will get consolidated. How come, sir? You will study under CFS chapter. They will require the data of X as per Ind AS. They will also require the data of SK as per Ind AS. Why? For the parent to prepare CFS as per Ind AS, it will require the data of all the companies as per Ind AS only. That means this SK will prepare the financials for its own purpose as per AS. Got that point? But SK will also have to furnish the data to parent as per Ind AS also. That means SK will have to do double work. SK will have to apply AS for its own purpose, but SK will have to furnish data to parent as per Ind AS. Furnished data to parent as per Ind AS for CFS purpose. For CFS purpose. Are you able to understand this point? Yes or no? Yes or no? Tell me this thing. Are you able to understand this point? Yes, perfect answer. Acha, what remedy can be opted by SK Limited? See, SK has to do double work. See, other companies are already following Ind AS. So for them to get the data as per Ind AS is very easy. But this SK has to prepare AS financial statements for its own purpose, but also has to furnish data to parent as per Ind AS for CFS purpose. SK can opt for one remedy in this case. Can you tell me what remedy is available with SK? Perfect answer. What SK can do is, even if Ind AS is not applicable to SK, but can I say that SK can opt for Ind AS voluntarily? See, Ind AS has given the option to the companies to opt for Ind AS voluntarily. Srinivas has given me that correct answer, right? So what SK could have done is, he could have opted for Ind AS voluntarily, even if it is not see, it is not becoming applicable to SK because of anyone. It is just that SK has to give information twice, one as per AS, one as per Ind AS. So what SK can do is, it can give the information. It can opt Ind AS voluntarily and give the information and prepare the information as per Ind AS only. Okay. But you can give that as an alternate answer, but you will have to write this as AS is applicable to SK, and for the purpose of CFS, it will furnish data as per Ind AS. Of course, remedy is available. We can write the remedy also. Do you want to write the remedy? Remedy with SK. Opt Ind AS voluntarily. Simple. Opt for Ind AS voluntarily. Yes, Nishita, correct. Okay, perfect. Cool. Done and dusted. Okay. So we have done the third point also, and we have done the fourth point as well. Okay. Okay. So we have discussed quite a good number of concepts now. We have discussed in depth also, and this is getting covered in one question also. See, okay, we will do that question as well. Don't worry about it. So now I guess you guys deserve a small break. But before going on to break, let's revise whatever we have studied till now. Okay. So just give me 2 minutes. I will make you revise everything. First of all, let's start the revision in 3, 2, 1 and go. First of all, what did we revise? We started with this topic, Introduction to Ind AS. We said that Ind AS have been IFRS converged. That means there are some differences between AS and Ind AS, right? So those differences can be categorized into carve-ins and carve-outs. IFRS has two standards, IAS, IFRS, right? So the numbering of IAS will be same in INDES. IAS 1 will become INDES 1, but the numbering for IFRS will be in the series of 100. IFRS 1 will become INDES 101. Simple. Okay. Then we started with the point applicability of INDES. Now, for companies, remember simple 15, 16, 17. 15 voluntary, 16 phase 1, 17 phase 2. Okay. In voluntary, we need not check any criteria. In phase 1, listed, unlisted having net worth greater than or equal to 500 crores. In phase 2, all listed companies, full stop. All unlisted having net worth greater than or equal to 250 crores. Now, from when do we start checking the net worth? Net worth will be as per AS, and you need to start checking from 31st March 14. If the criteria is met of 500 crores in any of 14, 15, 16, you will apply from phase 1. Otherwise, phase 2. Once applicable, always applicable. So, if you fall under this phase, need not check for phase 2. If the criteria is less than 500 and net worth is only 300 crores, you will fall under phase 2. Do remember these points. Okay. Once applicable, always applicable. Apply to your comparatives also, previous year figures also. Also, if applicable to you, it will become applicable to your parent, subsidiary, associate, joint venture, but will not become applicable to fellow subsidiary. I will write it down. Fellow subsidiary not covered. Okay, we discussed this with the help of an example, but for the purpose of CFS, this fellow subsidiary will have to furnish data as per India's only. Okay, because whenever India's become applicable to parent, parent will apply it to both standalone and CFS as well. Okay, so we have covered the points till here. See, when we study for the first time, it might take hours, but revision can be done only in few minutes, right? So always remember this point. If you are studying anything for the first time, if you do it properly, the revision can be done in a much quicker manner, right? So studying first, if you invest a lot of time, that will save time during your revision. Okay, so I hope this helps. Now let's take a small break and we can resume after the break. Okay, so I hope it was good. I hope you are able to understand each and every concept. Of course, we will try to complete the full chapter today itself. Okay, so thank you so much everyone. Bye bye everyone. Take care. See you all. Bye bye. So at what time can we resume? It is 7:23 now. How about resuming at a 15 minutes break will be sufficient for you guys? So how about resuming at 7:40 p.m.? And guys, one thing I want from you is being consistent. See, first 10 days everyone will be live, I know. But on the 11th day also you have to be consistent. That is the only manner in which you can complete your classes on a timely basis. Do remember this point. Okay? Okay. So let's meet on 7:40. Thank you so much. Bye bye everyone. Take care. See you all. Bye. Hello everyone. Welcome back after the break. I guess we can resume with the batch. Can we resume, guys? Are you ready, guys? Shall we resume? Yes. Just give me on confirmation. Is everyone back? See, guys, you need to reply, okay? I am not any antaryami to assume whether you are back or not. Okay, I got your replies. Thank you. Thank you for replying. Perfect. Works like a charm. Okay. Let's resume. Okay, let's resume with this. Okay. Now we had covered the fourth point. Okay, I'm resuming. Okay. So welcome back after the break. Now let's resume with the further points. So we had studied for the first 4 points, right? Now let's resume with the fifth point. Now what the fifth point talks about, it is a very interesting point. Try to understand this point, okay? What we studied in the previous point was, if it is applicable to you, it will become also applicable to your parent, to your subsidiaries, to your associate, to a joint venture, right? But what if your parent is a bank? What if your parent is an insurance company? What if your parent is an NBFC? Sir, why am I saying this? Because we already discussed that we are only discussing the applicability for companies as of now, which are other than banks, NBFC, insurance companies. So if you are a normal company, let's suppose Aakash AK Limited is a normal company, but BB Virtual is an NBFC. So now, will this NBFC apply Ind AS from today only, or will the NBFC check its respective dates? So the standard has clearly mentioned that if your parent, subsidiary, associate, joint venture is a bank, insurance, NBFC, then you will check their respective dates. You will not apply Ind AS immediately because of AK Limited. Let's say, for example, BB Virtual is a bank. So that means just because it has become applicable to AK Limited, that doesn't mean it will also become applicable to this parent bank. If your parent is a banking, insurance, NBFC, you will check the respective dates. So what are the respective dates? We will study below. So just remember this point. Clear? Guys, is this clear to everyone? Okay, sir. Clear with this. So if your parent, subsidiary, associate, joint venture is a bank, insurance, NBFC, check the respective dates. Okay. Now, we already studied that if you are listed company, you will automatically fall under phase 2. But what if you are listed on a SME exchange? Now, what is the meaning of SME exchange? It means small and medium enterprises. It means small and medium enterprises. So if you are listed on a small and medium enterprise exchange, now what is this exchange? In this exchange, only very small, having net worth of 10 crores, 20 crores are listed. So such companies which are listed on this exchange need not apply Ind AS. It is logical also, na? Because even if they are listed on a very small exchange. Their net worth is very small. So they need not apply the criteria of Ind AS. It is fine. Okay? Okay, sir. Comparatives shall also be given as per Ind AS. We have already discussed this. Okay. Now, last point is, company which are not covered above shall continue to apply AS. So the companies which are not covered above, the partnership firms, the HUFs, will still apply AS. They will not apply Ind AS. So this was the criteria of companies which we have just completed. I hope this is clear to everyone. Don't worry, at the end of the lecture, I will revise you everything. So don't worry about it. Okay? Okay, sir, done. Now, let's proceed further. Now, we discussed the criteria for companies. Now we will discuss the criteria for banking companies, insurance companies, NBFC. Now we will discuss the criteria for banking company, insurance companies, NBFCs. So for banking and insurance companies, ideally one date was already prescribed. But because the implementation of Ind AS is so tricky for banking and insurance companies, it has been deferred until further implementation notice. It has been deferred. The deferment of implementation has been done for banking and insurance companies. So banking and insurance companies will not immediately apply Ind AS as of now. They will apply only once when a circular is out, right? So it becomes easier for us. Nice, sir. We have to study little less. Okay. So for banking insurance, you will not apply Ind AS as of now. So what about NBFCs? See, for NBFCs, there is again phase 1 and phase 2. For NBFCs, there is again phase 1 and phase 2. But the important point here is, can you see any voluntary adoption? The answer is no. For bank, insurance, NBFC, they cannot apply it voluntarily. In case of companies, they were allowed to apply voluntarily, but in case of banking, insurance, NBFCs, they are not allowed to do so. Right? It is written also here. Voluntary adoption is not allowed in case of banks, insurance, NBFCs. Do remember this point. Now, there is only phase 1, phase 2. The limit of phase 1 is same like companies. All listed, unlisted, having net worth of greater than equal to 500 crores. The limit of phase 2 is same like companies. All listed companies, all listed NBFCs, full stop. All unlisted NBFCs having net worth of greater than equal to 250 crores. Once applicable, always applicable. Everything else is same. Right? But the dates are different. Phase 1 date starts from 1st April 18. Phase 2 starts from 1st April 19. Now, sir, how do we remember these dates? 3 dates which we studied previously, now 2 more dates. Now it has become very more confusing for us, sir. Alright, don't worry, why fear when AK is here? It is very simple. Just go in the chronological order, keeping a gap of 1 year. Let's say, for example, we studied previously 15, 16, 17. So 1st April 15, 1st April 16, 1st April 17. Now just keep a gap of 1 more year and go on. 1st April 18, 1st April 19. Simple. Now this was for voluntary adoption of companies, and this was for mandatory adoption of companies, phase 1, phase 2. As soon as it gets over for the companies, we should start with NBFCs. And for NBFCs, there is only mandatory. So mandatory for NBFCs, phase 1, phase 2. The criteria is the same like companies. Phase 1, net worth greater than equal to 500 crores. Phase 2, all listed, unlisted having net worth of greater than equal to 250 crores. Simple. So just go in the sequence. 15, 16, 17, 18, 19. 15, 16, 17 is for companies. 15 voluntary. 16, 17 mandatory. 18, 19 is for NBFCs. 18 phase 1, 19 phase 2. Simple. Is this clear to everyone? Okay. Perfect. Are yes or no? Just tell me yes or no. If you don't tell yes or no, I will sing Dash into the Snow. You have heard that song? Are yes or no? Are dash into the snow with a one way. Over the hill we go, laughing all the way. One way. Sir, you're fine now? Absolutely fine. Okay, great. Works for everyone? Works. So, for NBFCs, easy to remember. I will keep a oral test for you. You will have to answer it. Okay? Okay. Let's proceed. Now, in case of NBFCs, the net worth is to be checked from which year? You should start, like in case of companies, we started checking from 31st March 14. In case of NBFCs, you will start checking from 31st March 16. You will start checking from 31st March 16. Right? So, how do you remember this date now? 2 years before the phase 1. So phase 1 starts in case of NBFC from 1st April 18, 2 years before this. In case of companies, phase 1 was from 1st April 16, 2 years before this. Ideally, it is very simple to remember. It is fine. Okay? Okay. Is this clear to everyone? Okay. So net worth to be checked from 31st March 16 and thereafter. Voluntary adoption is not allowed. Okay. If you are a urban cooperative bank or regional rural bank, these are very small banks. They are not required to apply Ind AS as of now. In case of banking, any which ways, it is not applicable till now. Okay. 4th point is same. What we already studied. If applicable to you, your holding subsidiary, joint venture, associate will also get covered. Okay. And also comparative shall be given as per Ind AS. Comparative shall be given as per Ind AS. So for banks, insurance, NBFC, the criteria is very similar to what the companies had. And for NBFC, the dates also we discussed. Just go in the sequence. 15, 16, 17, 18, 19. Okay. Now, we discussed for companies, we discussed for banks, we discussed for insurance companies, we discussed for NBFCs. Now a new category is also covered, mutual funds. You know, previously this was not introduced, but under the purview of Ind AS, the mutual fund companies have also been covered now. SEBI issued a circular where they mentioned that Ind AS will also be applicable to mutual fund companies from 1st April 23, and under that circular specific formats have also been given. So sir, do we need to study the formats for mutual funds as well? As of now, the answer is no. In case of mutual funds, you are only required to know this information that Ind AS is applicable to mutual funds also. Formats are different and it became applicable from 1st April 23. That's it. You are not required to study anything else along with this. For mutual funds, only this much knowledge is sufficient. I hope this is clear to everyone. Okay, perfect. Now, as I already mentioned, net worth should be as per AS. So we already know what should be the formula of net worth, but it has been clarified again. Just give it a plain reading because this will be covered in some questions also. Like how do we calculate the net worth? So how do we calculate it? Paid up share capital plus reserves plus securities premium. If you have any losses in the reserves, you will deduct it. So less accumulated losses, less deferred expenditure, and less any miscellaneous expenditure. You remember in AS we used to have some certain expenditure which we used to not write off in day one. We used to write off over the period of 5 years, right? So those were known as deferred or miscellaneous expenditure, which we used to show on asset side, right? So if there is any such thing shown on the asset side, you will deduct the same, right? But the important point lies here. This is important. Now what is mentioned here, please read it carefully. But net worth does not include. Now what is the meaning of the word does not include? Does not include means these particular reserves are to be ignored. The meaning of does not include should not be interpreted as you have to deduct it. You do not have to deduct it. You have to ignore these reserves, which we will discuss now. So net worth calculation should ignore the following reserves. The first one is reserves created out of revaluation of assets, which is known as revaluation reserve, right? In AS10 we used to discuss this. If you are not able to recall, it is fine. We will study this in this also. So if you have any revaluation reserve, just remember the name. If you have any revaluation reserve, you will ignore it. If you have any reserve because of write back of depreciation, ignore it. If you have any amalgamation reserve, you will ignore it. So these three reserves you have to ignore. These three reserves you have to ignore: revaluation reserve, depreciation reserve, or amalgamation reserve, right? Okay. So with this, we are able to complete the concepts of introduction to Ind AS. But don't worry, only studying concepts is not sufficient. We will also have to cover the questions, right? So we will try to cover maximum questions possible. So the questions which are very simple, I will try to give you in homework so that at least at home also you are able to recall things, you are able to revise things. But the questions which has even 1% tricky point, we will try to cover in the class itself. Okay, we will try to keep it very simple. So with this, let's test your clarity. Let's test how much you are able to understand by solving some questions. Okay, chalo. So let's move towards the question one aspect. Okay. Before discussing the questions, whenever any question I feel is important, I will mark it as LDR. Now what is the full form of LDR? LDR means last day revision. LDR means last day revision, right? So whenever I feel that any question is important, I will give it a marking of LDR. Now why is this important? See, in FR there are more than 1500 questions. Tell me one thing, is it practically see, in the first reading we will try to cover everything, but you will have to study everything. But during exams, during revision, is it practically possible to cover all the 1500 questions? No. That is the time when the student realizes that concising the content is also equally important along with studying it. So now instead of student concising it, I will help you in that conciseness. I don't know about other subjects, but in FR, you will have that luxury from my side, right? So now what is LDR? Please don't interpret the LDR questions as those questions which will come in exams. No. So what is LDR? LDR means those questions which cover your maximum concepts, which covers your tricky concepts. So let's say for example, this chapter has 10 questions. Let's say for example, 10 questions are there. So I will give you 2 to 3 questions as LDR, which will cover 100% concepts. Those 2-3 questions which has tricky points, which might appear in the exam also, but which cover your tricky and all the concepts, those will be LDR, right? So that luxury I will give you. In the first reading, you can read all the questions, it is fine. But when you are revising the FR at a later stage, or when before exam you are allotting 3 to 4 days for FR, that is the time that these markings will come very handy for you. And that is the time when you will remember me, that Aakash sir dashing to the snow. Anyways, is this clear to everyone? Tell me yes or no. Is the concept of LDR clear to everyone? Okay sir, clear. Now let's read these questions. So as I said, the simple questions we will try to give in homework. The tricky questions, or even if 1% part is there which is important, I will cover in the class itself. Also when I give you homework, please make sure you are reading it on a daily, on the same day, and if you have any doubt, you are clearing it in the immediate next day. Okay, okay, sir. So let's start discussing illustration number 1. Illustration number, of course, is not LDR. It is a very simple question. What is to be discussed? The balance sheet is given. Let's read. Following is the snapshot of a audited balance sheet of company A as on 31st March 14. Okay. Company A's equity shares are listed. These are listed shares. It is a listed company. Listed company, you know, na, by default comes under the purview of Ind AS under phase 2. But let's check. Listed on the Bombay Stock Exchange. Okay. Now net worth is given. I will request you one thing. I will give you 10 seconds, 20 seconds, let's say. You will have to calculate the net worth and answer me. What is going to be the net worth? You will have to calculate the net worth and answer me. Please. Time starts now. 20 seconds I'm giving you. Because see, trying on your own is very important. Okay. You will have to try. I want the answer of net worth. Okay, time's up. Last 10 seconds. 10, 9, 4, 1, 0. Sir, what was this counting? This is AK style counting. Okay. Now let me try. Okay, I got an answer of 585. Maximum people have answered 585. Let's check. So what will come under revaluation reserve? Net worth. Capital, yes. Premium, yes. General reserve, yes. Revaluation reserve, ignore. Profit and loss, yes. Miscellaneous expenditure not written off. We will deduct this. So this will be less. So when we say we need to find the answer. Okay, I also got a maximum answer of 505 also. Okay, 505, 585. These two answers I'm getting. Okay, let's see. 160 plus 200 plus 150 plus 75 minus 80. So this gives me the answer of 505. So 505 is the correct answer. People who have answered 585. Boo! Okay. 505 is the correct answer. Now, as per the roadmap, which phase will the company fall into? Company checking the net worth for 31st March 14. Now, tell me which phase, phase 1 or phase 2. It is exceeding 500 crores. It is exceeding 500 crores before 1st April 16. Right. So, perfect answer, phase 1. Phase 1 means which date? Sir, we forgot the date. Arey, I told you na. Just remember the sequence. 15, 16, 17. 15 was voluntary, 16 is mandatory phase 1, this is mandatory phase 2. So we are covering under mandatory phase 1, 1st April 16. In phase 1, irrespective of it is listed or unlisted, if the net worth is more than 500, phase 1. That's it. Clear? Okay. So net worth is 505, it is fine. Okay. Now also second part of this question is asked, will your answer change if company A is unlisted? Will your answer change if it is unlisted? The answer is no. Why? Under phase 1, irrespective of whether it is listed or unlisted, because your net worth is more than 500 crores, you are under phase 1, and under phase 1, both listed and unlisted are covered. So your answer will not change. Will your answer change? The answer is no. No change in answer. Right? So this is given here. See, whenever there is a practical question, we will try to solve in the notebook. Whenever there is a simple question, theory question, considered question, where we can do the markings in the kitab, in the notebook, in the textbook itself, we will do the marking. I was saying kitab. Kitab is a Hindi word for notebook, right? Okay. So whenever it is possible for us, it is a very simple question. We will mark in the textbook itself, so that it saves our time also. It saves our effort also, right? Unnecessary fill in the notebook won't help you. Okay. So the net worth 505. Companies are listed, meets the net threshold, phase 1, apply from 1st April 16. Please keep on marking the relevant highlighting part. Okay, that is important for you, because during exam it is not important for us to leave the whole text. We can only read the question and read the highlighted part. That will save our time also during exams. Okay. See, what do you need to revise during exam? Do the preparation from now only. Make the strategy from now only. That will save your time. It is as simple as that. Okay. Now, even if company A is unlisted, it won't matter. Ind AS would still be applicable from 1st April 16 only, phase 1. I hope this is clear to everyone. Okay. Now, illustration number 2, again a simple question. What does it say? It says, let's say in illustration number 1, the balance of profit and loss account is negative 375 crores. Now, what is the meaning of this? It means that instead of positive 75 ka balance, consider the balance of profit and loss was negative 375. Everything else is the same. You will have to answer me what is the net worth. Giving you 20 seconds again. Time starts now. Instead of profit and loss being positive 75, consider it as negative 375. Now will your answer change? Time starts now. Time starts now. Okay, already got an answer. Supraj has already answered me. Srinivas has already answered me. It is 55. They give me an answer 55. Let's check. Let's check whether this answer is correct or not. Let's do the calculation. 160 plus 200 plus 150 minus 375. Ignore this and minus 80. 55 is the correct answer. Right, Manoj? Right, Ima? Very good. So 55 is the correct answer. So net worth will be 55. Right. When India should be applicable to company A? Will your answer change if A is unlisted? That means in part A. In part A is listed company. Right? Listed company net worth 55 CR. Now tell me, will it fall under phase 1? No, because under phase 1 we need to have a net worth of greater than equal to 500 crores. Will it fall under phase 2? The answer is yes, it will fall under phase 2. Why? Because under phase 2, irrespective of your net worth criteria, all listed are covered. So phase 2 may it will fall. But from which date? So remember this point: 15, 16, 17. 15 voluntary, 16, 17 mandatory, 16 phase 1, 17 phase 2. So it will cover under phase, get covered under phase 2 from 1st April 17. Right? Okay, phase 2. Next point. Will your answer change if company A is an unlisted company? What if company A is unlisted? For unlisted, neither it is exceeding 500 crores, neither it is exceeding to how much? 250 crores. That means if it is unlisted, then India is not applicable. If it is unlisted, India is not applicable. Right? Perfect answer, Shankar. Very good. So you can read the solution at home. Okay, done. Let's go with illustration number 3. Now, they are saying net worth of company B. Net worth of company B, an unlisted company, was 600 crores on 31st March 14. Okay. That means India becomes applicable from when? Unlisted. But the net worth is exceeding 500 crores. That means India becomes applicable from phase 1. Phase 1 was 15, 16, 17. Voluntary, mandatory, mandatory. That means 1st April 16. Right? Okay. And do you remember that point? India is once applicable, always applicable. So if they're applying Ind AS from 1st April 16, it will always be applicable to you. Okay. However, due to losses incurred in the financial year 14-15, the net worth was 400 crores on 31st March 15. Does it matter that the net worth are reduced? The answer is no. Why? Because Ind AS once applicable, always applicable. So once you have fallen under phase 1 and Ind AS has become applicable to you, you will have to always apply Ind AS. So this drop in net worth is of no concern for us. It is of no point. It doesn't have any point for us, right? Perfect. So let's mark the important relevant part here. Net worth greater than 500 crores, phase 1. Phase 1 starts from 1st April 16. Simple, right? Irrespective of the fact that as on later date net worth falls, it doesn't matter, right? Okay. Clear? Clear, sir. Got this point. Let's proceed with illustration number 4. Okay? Okay. The net worth of company C was 400 on 31st March 14. So it is less than 500 now. So as of now, it is falling under phase 2. But the net worth on 31st March 15 was 600 crores. Do you remember that point? If 31st March 14 or 31st March 15 or 31st March 16, if in any of the years, any of the net worth exceeds 500 crores. So you will fall under phase 1 or phase 2. See, as per 400, you are falling under phase 2. I get that point. But before phase 1 applies, that is before 1st April 16, you have met the criteria of 500 crores. So you will fall under phase 1 or phase 2. Perfect answer, sir. Because we have met the criteria before the cutoff date of phase 1, we will fall under phase 1. It is of no concern that previously your net worth was 400. It is fine, but it increased more than 500 before 1st April 16. That means you will fall under phase 1. Do you remember under phase 1 we start from 1st April 16? Now see, I am not going to repeat why 1st April 16. Okay, we can remember it 15, 16, 17. Okay. Clear with this point? Okay. So you will fall. So these concepts, few of the concepts were ideally not discussed in Ind AS. So do you remember I said that some guidance note have been issued? They have been issued under the naming of ITFG bulletin. Sir, what is the meaning of ITFG? Do write the full form. See, you need not give this reference in exam. Okay, it is not relevant. It is like section number. Section number need not be given every time, right? So these references need not be given. So, but for reference purpose, you need to know the full form of ITFG. It is Ind AS Technical Facilitation Group. Facilitation Group, ITFG. So this issue was resolved in this part, and they said that net worth shall be calculated on the basis of first audited financial statements ending after in respect of meeting threshold. Any company that meets threshold in a particular financial year, Ind AS becomes applicable to such company in immediately next financial year, right? So in this case, if you are meeting before phase 1 in any of the years, you will apply from immediately 1st April 16 only under phase 1. So in the present case, you will get covered under phase 1 and you will apply Ind AS from 1st April 16. That's it. See, these points can come under MCQ also, right? Shankar, you have said this properly, right? Perfect. Clear? Done and dusted, sir. Now, let's move on to illustration number 5. A good question. Okay, now what does it say? Company D is a parent of group A. Now, what is the meaning of this? Let me prepare a hierarchy chart. See, company D is the parent and it has one subsidiary, company A. It is a subsidiary. Simple. Okay, sir. A is an unlisted company having net worth of 60 crores. So A in itself is not meeting the criteria. Simple. Following are the other companies of the group. Now, what are the other companies? They are saying there is company B also. Who is company B? Unlisted company, and company B is a subsidiary of A. That means A also has a subsidiary, company B. So you can say under the second transaction, A is the parent and B is the subsidiary, right? And also there is mentioned that it has company C. It is a subsidiary of B. So B also has a subsidiary. Company C. In this case, company B becomes the parent and C is the subsidiary. So this is the hierarchy. D is the main parent. D has one subsidiary A has one subsidiary B, and B has one subsidiary C. Try to simplify this point. Clear? Okay, sir. Now, name of the company is B. Net worth is given of which company? Net worth is given of this company, B's net worth is given here. C's net worth is given here, right? So the net worth of B was 600 crores on 31st March 14. So B's net worth is 600 crores. What about C's net worth? It is 150 crores. What about A's net worth? It is 60 crores, right? Whether Ind AS is applicable to ABC, they are not talking about D. Let's ignore this point. They are not talking about D. D is of no use for us. Let's ignore D. Okay. Now what are they saying? That Ind AS becomes applicable to B. Net worth is 600 crores. That means Ind AS applicable. Now you need to tell me, they are asking whether Ind AS will be applicable to A and C as well. Because see, B has met the criteria applicable in phase 1. Whether it will be applicable to A and C also. So Shankar, Srinivas, Manoj, Hima, everyone says it will be applicable. Why? Do you remember that point? If applicable to you, it is like a disease. Applicable to all. Applicable to immediate parent. Applicable to immediate subsidiary also. Of course, fellow subsidiaries are not covered. So what about D? They have not asked for D, and also there is no clarification around D. So you can ignore that aspect as of now, right? So if applicable to B, its parent and its subsidiary will also get covered. So A and C will also get covered. So you can mark the relevant part, right? Company A and C do not exceed the net worth criteria. However, net worth of B exceeds 500. Hence, it would be covered under phase 1. As index becomes applicable to B, the parent of B, that is A, and subsidiary of B, that is C, will also get covered under Ind AS, irrespective of the net worth criteria. Simple. Right? So, a good question. Okay. But if you are able to understand, even if I would have not discussed this question, you would still have cracked it. Why? Because you have studied the concepts properly. That is what I'm trying to tell you. If you are focusing on the concepts properly, you can crack any question. Right? This is just a validation that you are able to recall things. That's it. Simple. Okay, sir. Let's proceed further. Illustration number 6. You will mark this question as LDR. You will mark this question as LDR. Right? Now, this is a very good question. Why? This is LDR, but we have already discussed a similar issue in our example. Once I read this, you will understand what I'm telling you. Okay. There is company D. It has two subsidiaries. If the chart is not clearly visible to you, let me redraw it. There is company D. It has two subsidiaries, E and H. E has two more relationships, one subsidiary and one associate, and H has one relation, that is one subsidiary. Okay, this is the hierarchy. You can highlight it if not clearly visible. Okay. So do you remember the example which I had given, the notebook example number 1, which I discussed? It is not applicable to fellow subsidiaries. Do remember that point. Okay. Now I will ask you something. They are saying this structure, D has two subsidiaries, E has one subsidiary, one associate, and H has one subsidiary. Okay. All the companies in the above structure are unlisted. All are unlisted. And the net worth of company E is 300. So let me mark it. The net worth is 300 crores. So with this net worth, you will fall under which phase? You will fall under phase 2. That is, you will apply Ind AS from 1st April 17 in case of companies. Clear? Okay, sir. All other companies' net worth is below 250. Remaining all companies' net worth is below 250. Right? To which company would Ind AS be applicable? To which company Ind AS will be applicable? Giving you 10 seconds to interpret this fact. Ind AS will become applicable to which companies because of E? See, it is applicable to E. We all know this. It is applicable to E. We all know this under phase 2. What about the other companies? Which all companies will get covered? So I got the answer D, E, F, G. Okay. This is one answer which I have got. Okay. Okay, Vijaya. Okay, Srinivas. Okay, Supraja. Okay, Shankar. Ajay, Manoj. Okay. Okay, Devesh. Okay, Hima. Very good answer, everyone. Maximum people have answered correctly. See, if applicable to you, your direct parent gets covered, right? So applicable, Ind AS applicable, cause of E, right? Copy. For F also Ind AS applicable, cause of E. For E, G also Ind AS applicable, cause of E. Let me write it here. Okay. For G. For F. What about H and I? Not applicable. Why? Do you remember fellow subsidiary is not covered? Step brothers not covered. Just for fun, okay? Okay, whatever I say in this class now, it is just for fun, okay? Don't take it very seriously. Some people might get affected by my terms. It is just for fun. Take it in lighter mode. Okay. So Ind AS not applicable to these fellow subsidiaries. Okay? Okay. This was one discussion which we already discussed in our examples. One more thing I want to discuss, which I also discussed in my example. D is the parent company. Ind AS has become applicable to the parent company. This D will prepare SFS and CFS both. Even if H and I are not required to apply Ind AS, even if H and I are not required to apply Ind AS, but for the purpose of CFS, they will have to send the data as per Ind AS to the parent. Do you remember this point? I will write it down. H and I will still send data as per Ind AS to company D for CFS purpose. Do you remember this point? We have already discussed. Do you remember? Yes. This is the same example which we took in the class. Just the company's name have changed, right? So do you remember the remedy also which I discussed? They have a remedy of following it. They can follow voluntary adoption. They can take the voluntary adoption of Ind AS. Yes. Okay. So you can discuss the remedy also. This full part has been discussed here. Okay. So just give it a reading at your home. But if you are able to understand this, it is fine. Also, one more thing, some students ask me that, sir, it is important to replicate the whole language. Tell me one thing, is it practically possible to learn the language as it is in 1500 questions? The answer is no. So you need to just give the answer in your own words. Just keep the keywords relevant, right? That like Ind AS not applicable, fellow subsidiaries, H and I will furnish the statements as per AAS, but for the purpose of CFS, they need to give the information as per Ind AS also. That's it. They can remedy also available to H and I for voluntary adoption, right? Okay. So if you want, I will mark the relevant part for you. Company E, above 300, phase 2, 1st April 17. Okay. Okay. Noted that Ind AS applies to holding subsidiary, joint venture, associate, does not extend to another fellow subsidiary. Okay. Okay. Holding company will be required to prepare SFS, CFS mandatory under Ind AS, right? Such subsidiaries may be required by the holding company to furnish financial as per Ind AS, right? Fellow subsidiaries may, however, opt for voluntary adoption of Ind AS, right? Yes. H and I not covered under Ind AS. However, H and I would be required to prepare its financials under Ind AS for D for CFS, right? They may also opt voluntary application of Ind AS, right? And if they are not opting for it voluntarily, H and I may continue to prepare its financials as per Ind AS. So this paragraph is important. You can say that. This whole question is important, but this question became easy for us because we had discussed a similar example in a class itself. Okay, done. See, again, just to clarify, H and I have two remedies, two options. First, preparing its own financial as per AS and submitting the data for CFS as per Ind AS. Option number 1. Option number 2, they may opt Ind AS voluntarily, so they can prepare their own financial as per Ind AS and submit the data as per Ind AS. Simple. So they have two options. Okay. Okay, sir. Done. This was example number 6. Good question. Let's proceed further. Example number 7. Okay. ABC Incorporation is incorporated in a foreign country. Oh, one company which is a foreign company, guys. So should we apply the requirements of Ind AS to foreign company? The answer is no. Ind AS is applicable to Indian companies, right? So Ind AS should not be applied to foreign companies, right? So we have a company ABC Incorporation. It is a foreign company. So for foreign company, you will not check any criteria. Ind AS not applicable directly. Not applicable Ind AS. Why? Because they are not an Indian company. It is not an Indian company, right? Now it is mentioned that it has two subsidiaries, X and Y, right? So I will summarize it for you. It has two subsidiaries, X and Y. X has a net worth of 600 crores. Okay. On 31st March 14, of course. And Y has a net worth of 150 crores. So now, and the net worth of ABC is 700. But this is irrelevant now. Please don't say that because ABC has a net worth of greater than 500, both the subsidy will be covered. The answer is no. ABC is a foreign company. India's provisions are not applicable to the foreign company. Ignore this company. Just focus on these two companies individually because its parent is a foreign company. So it is not relevant for us, right? So ignore this company. Now, X individually, does it meet the Ind AS criteria? The answer is yes. So, Ind AS applicable. Simple. Now, please don't say that, sir, if applicable to if it is applicable to X, it will be applicable to parent also. It will be applicable to parent, but if the parent is an Indian company himself, if the parent is a foreign company, please don't apply the requirements of Ind AS to a foreign company. Irrespective of the fact that it is a parent, doesn't matter. It is a foreign company. Even if applicable to X, you will not extend the applicability to ABC also because ABC is a foreign company. Again, repeating the same point. Okay, so applicable to X. What about Y? Because of X, will it be applicable to Y? The answer is no because it is a fellow subsidiary. And individually, Y is not meeting the criteria. So to Y, Ind AS not applicable. Simple. Done with this point. This was illustration number 7. Simple question. You can read the solution. Clear? Yes, sir. Absolutely clear. Let's proceed further. Illustration number 8. Illustration number 8. LDR question. You can mark this question as LDR. Right? Now, let's see what they are trying to say. This is a very good question. Okay. As per the roadmap, Ind AS is applicable to company X from the financial year 17-18. Okay. Ind AS is applicable to company X from the financial year 17-18. Okay, sir. Company X is a non-finance company and is a subsidiary of company Y NBFC. That means, let me prepare a chart. X is a subsidiary of Y. X is a subsidiary of Y. That means, company Y is the parent and X is the subsidiary. Am I right or am I right? Yes, what I am saying is, X is a subsidiary of Y. That means Y is the parent, X is a subsidiary. And X is a non-finance company, but Y is a NBFC. So let me write it down. Y is a NBFC and X is a normal company. Now, let me put it this way. They have clearly mentioned that Ind AS applicable. Ind AS applicable from when? From 17-18. Okay. Now, if you remember, if Ind AS applicable to one company, it will become applicable to the parent, to subsidiary, to associate, right? But if that parent is NBFC, we will have to check the respective dates, right? So don't immediately apply Ind AS to Y from 17-18 because Y is a parent and that parent is a NBFC. You will check the respective dates. Do you remember this point? Yes, sir. Okay, so for Y, do not apply Ind AS from 17-18 as parent is NBFC. We will check respective dates. We will check respective dates. As parent is NBFC, we will check respective dates. Clear? Yes, sir, absolutely clear. As parent is NBFC, we will check respective dates. Okay, sir. Now, let's read the question further. I hope you have written this. Done writing, guys? Okay, sir, done. Let's proceed further. Now, company Y is an unlisted NBFC having net worth of 400 crores. Okay. Y is a unlisted NBFC having net worth of 400 crores. Okay. Net worth 400 crores. Unlisted. Tell me phase 1 or phase 2. And tell me the date also. Sir, we don't remember the dates. Arey, it is very simple, baba. Do you remember 1st April 15, 1st April 16, 1st April 17, then go on, 1st April 18, 1st April 19. This is voluntarily company. This is mandatory for company. This is mandatory for company. Phase 1, phase 2. Then this is mandatory for NBFC. And this is also mandatory for NBFC. Of course, phase 1, phase 2. It will be covered under which phase? Perfect answer, phase 2. Because net worth is greater than or equal to 250. Phase 2, and from which date? 1st April 19. Right? Do you remember the criteria? Under phase 1, the net worth is required of greater than or equal to 500 crores. Under phase 2, all listed companies are covered. Then all unlisted having net worth of greater than or equal to 250 crores. Right? Yes. Oh, sorry, I have written it in the wrong place. I should write it here. One sec. Sorry. For Y. Y is NBFC, right? For X, it is already applicable. Sorry. Yes. Thank you for rectifying, Srinivas. Yes. So, applicable in phase 2. From which date? 1st April 19. Absolutely correct answer. 1st April 19. Okay, sir. Got it. Is the discussion over? The answer is no. There is still some discussion to be done. But tell me one thing. Is this point clear? That means for X, being a normal company, Ind AS became applicable from 1718. The question mentioned itself. And for Y, Ind AS will be applicable from which date? Ind AS will be applicable from their respective dates because it is a NBFC parent. So respective date is from 1st April 19. Okay. Now some further discussion. That means X is applying Ind AS from 1st April 17 and he is applying from 1st April 19. Can I go in little bit depth if you allow me? Of course you have to allow me. Okay. Little bit depth. Okay. Tell me one thing. That means this parent, I will say company Y being a parent, from 1/4/19 will prepare SFS and CFS as per Ind AS. But from when? From 1st April 19. From 1st April 19, the parent will prepare SFS and CFS both as per Ind AS from 1st April 19. Okay, sir. So tell me one thing. For the year 17-18 and for the year 18-19, for these two financial years, company Y will prepare CFS as per AS or Ind AS? As per AS or Ind AS? Before Ind AS became applicable to the parent, this parent will prepare the CFS as per AS or Ind AS for the previous two financial years. Sir, for the previous two financial years, Ind AS were not applicable to the parent. So it will prepare as per AS. Absolutely correct answer, sir. Now just see the depth of this question. Just see the depth of this question. Because Y needs to prepare CFS as per AS, Y will require the data from subsidiary X as per AS. As per AS. That means company X, which is a subsidiary, for the year company X, for the year 17-18 and 18-19, prepare its own financial statements as per Ind AS. I get that point. But for the purpose of CFS, for CFS purpose, furnish data. For CFS purpose, you can say furnish data. To Y as per AS. We studied a vice versa case above, where the Ind AS became applicable to parent early. So the subsidiaries which were preparing financials as per AS had to furnish the financials as per Ind AS also for the purpose of CFS. But this is a reverse case where the Ind AS is getting applicable to parent at a later date. So till the time it becomes applicable to parent prepares CFS as per AS. So even if the subsidiary is preparing the financial as per Ind AS, they will have to furnish the data as per AS also to the parent. Yes. So this is the depth of this question. I hope you are writing this part along with understanding point, right? Yes. Cool. So of course you can read this point. It is written. We will read it together. So for NBFCs net worth less than 500, they will fall under phase 2, I guess, which applies from 1st April 19. Okay. In the given case, Y NBFC shall apply Ind AS from 1st April 19 along with comparatives. X shall apply Ind AS in its statutory financials from 17-18. But for the purpose of consolidation by Y, for the financial year 17-18, 18-19, company X shall also prepare its individual financial statements as per AS. Right? I hope. See, if we directly read this, maybe we would have been not that clear. But after discussing this, I hope the clarity is there, right? And to give you a good news, chapter is over. We have completed our first chapter, Introduction to Ind AS. We have completed our first chapter, Introduction to Ind AS. Of course, we will revise it. Don't worry about it. But have you understood this? Were you able to understand? See, I'm not saying that have you retained it 100%. That is not possible. Now you have just studied from me. I have taught you things. Of course, when you revise it on your own, you will get a better clarity on this. But were you able to understand whatever I have taught you in the class? Just tell me yes or no. And did you enjoy today's session? Before we start today's revision, just tell me, did you enjoy today's session? Did you like it? Were you able to understand this? Because this is going to be the energy in all the lectures, and I want your participation on a daily basis. Please, if you have opted for live, do come live on a daily basis. It is now or never. And if you have opted for recorded, please watch the recorded content on a daily basis. That is my request. Okay. In Hindi, there is a Punjabi song where the dance step is this. So whenever we complete a chapter, we will do this step. Okay, so we enjoyed a lot and had a great motivation. Yes. And please remember the words which I said in the start of the batch. Okay. Okay. So we have wrapped that session. Of course, what I've planned for you is whenever I'm revising, whenever I've completed one topic, I will revise the whole topic and provide that revision separately to you. That will help you for revising the content. Likewise, if in case after 6 months you are not able to recall, you need not watch the full lecture. You can just watch the revision part. So what I will do is I will record the revision separately for you guys. How does that sound to you? Works? Okay. Okay, cool. So let's wrap the session here so that we can record the revision session separately. Okay. So thank you so much, everyone. I hope you like the session. You need not go anywhere. We need to wait for the revision session. Okay. I'm just wrapping up this lecture. So thank you so much. Bye-bye, everyone. Take care. See you all. Bye-bye. So now what we will do is we will revise the whole session, whatever we studied today. Okay. Are you ready, guys, for the revision? Okay. So welcome to this amazing revision session where we will revise Introduction to Ind AS and Schedule 3. Not Schedule 3, we will only revise Introduction to Ind AS in this lecture, okay? And we will also revise the key point of this revision is going to be, we are not only going to revise the concepts, but we will also revise the questions, okay? So without wasting any time, let's start the revision in 3, 2, 1 and go. First of all, the topic name was Introduction to Ind AS. In this, if you remember in class, before starting this topic, I told you some background about Ind AS. Like, Ind AS are IFRS converged. That means they are 95 to 97% same. There might be some differences which are known as carve-ins and carve-outs, right? IFRS includes two things, IAS and IFRS. The numbering of IAS is same like Ind AS. IAS 1 becomes Ind AS 1, IAS 2 becomes Ind AS 2. But IFRS 1 becomes Ind AS 101. IFRS has been issued in the series of 100. Got it, sir. Now, Ind AS is applicable to which all companies? We will study here. So the category of companies have been bifurcated into 4 parts. Companies, banks, NBFC, insurance companies. ideally not 4, it should be 5 because even mutual funds are covered separately. Okay, so now we will discuss the applicability for a company. Okay, first, voluntary basis is applicable to the company. They can apply voluntarily from 1st April 15, right? Now, if you wish to not opt for it voluntarily, you can choose mandatory basis, which starts from 1st April 16, which is phase 1, where the criteria is all listed, unlisted having net worth greater than equal to 500 crores. Or if you are not applied Ind AS from here, you might fall under phase 2, which starts from 1st April 17, where all listed companies are covered irrespective of your net worth. Or if you are unlisted company, if your net worth exceeds 250 crores equal to greater than equal to 250 crores, you will fall under phase 2. So now how do we remember these dates? I had already told you, just remember the sequence. It has a gap of 1 year. 15, 16, 17. 15 voluntary, 16, 17 mandatory. First will be phase 1, second will be phase 2. Phase 1, net worth criteria greater than equal to 500 crores. Phase 2, all listed companies, full stop. If you are listed, you will fall under phase 2. Second, if you are unlisted, the net worth, if it is greater than equal to 50 crores, you will fall under phase 2. Also remember, if you fall under phase 1 initially, Ind AS once applicable, always applicable. That means if you are falling under any of the criteria, you need not check the phase 2 criteria. Simple. Now, some important points to be discussed. First point, the calculation of net worth will be as per AS and not Ind AS, because as of now, the balance sheet available with us is as per AS only. Okay. Next point, the net worth which we should check, we should start checking from 31st March 14 and thereafter. That means if the net worth criteria of 500 is met in 14, 15 or 16, then you will fall under phase 1. If it is met thereafter, or the net worth is less than 500 and greater than equal to 250, then you will fall under phase 2. Okay, do remember, if you are applying Ind AS, apply it to your current year comparatives as well. Ind AS once applicable, always applicable. The next point is, if Ind AS is applicable to you, your parent, your direct subsidiary, your direct associate, your direct joint venture will also get covered under Ind AS. But fellow subsidiaries will not be covered. Do you remember the example which we discussed in the class? Let's say, for example, you are a parent company. You have 2 subsidiaries, AK and SK. And AK also has one subsidiary, X Limited. If Ind AS becomes applicable to AK, it will automatically become applicable to its parent, to its subsidiary, to its associate, to its joint venture. But fellow subsidiaries are not covered here. That means because of AK, SK will not fall under the purview of Ind AS, right? Okay, that means SK will continue to apply AS. But there was one more discussion which we just did, and that was if the parent is covered under Ind AS, the parent will have to prepare SFS and CFS both as per Ind AS. So even if SK is preparing its financials as per AS, for the purpose of CFS, SK will have to submit the data to parent as per Ind AS also. That means SK will have to do double work. He will have to prepare its own financial as per AS because Ind AS not applicable to SK. But for the purpose of parent to prepare CFS, it will has to furnish data to parent as per Ind AS as well. In such a case, SK will have one remedy also. Do you remember the remedy? SK can opt for Ind AS voluntarily. What will be the benefit of this? That means if they opt for Ind AS voluntarily, see, Ind AS is not applicable to SK, but if it opts for it voluntarily, that means SK can prepare its own financial as per Ind AS and can submit the same financial for the purpose of CFS as well. Right? We had discussed this example. Also, there is one question on this example as well. Okay. Next point. If your, Ind AS applicable to standalone as well as CFS, already discussed. If your parent, subsidiary, associate, joint venture is a bank, insurance or NBFC, then directly don't apply Ind AS. For if your parent, subsidiary, joint venture, associate is a bank, insurance or NBFC, then you will check the respective dates. Let's say, for example, in this example, AK is a subsidiary, normal company, but BB Virtuals is a bank. In that case, you will not apply Ind AS to BB Virtual because of AK Limited. BB Virtual will check its own date for application of Ind AS. Simple, because the dates for banks, NBFC, insurance is different. Okay, let's proceed further. Companies listed on SME need not apply Ind AS because SME are small and medium enterprises exchange. Very small companies are there, so they need not apply Ind AS. Also, as discussed, comparatives shall also be given as per Ind AS. Also, if even after all the above criteria, you are not falling under the purview of Ind AS, you will still keep on applying AS. Simple. right? These was for the companies. Now let's move on towards the other companies. If you are a banking company, the implementation is deferred until further notice. For insurance also, implementation has been deferred. What about NBFCs? Yeah, they have given mandatory adoption if you are meeting specified limit. So in case of NBFC or bank or insurance, there is no voluntary adoption. There can only be adoption if you are falling under the purview of Ind AS. For NBFC, there is again phase 1, phase 2. The criteria is same like companies. Under phase 1, listed, unlisted having net worth greater than or equal to 500 crores. Under phase 2, all listed NBFCs. Second, all unlisted NBFCs having net worth greater than or equal to 250 crores. Right? Now, how do we remember the date, sir? Do you remember? Just start with the first date. 1st April 15, then keep on moving in the sequence with a gap of 1 year. 15, 16, 17, 18, 19. 15 is voluntarily for company. 16, 17 is mandatory for company. Then as soon as the company's dates are over, start with NBFC. 18, 19 is for NBFC. Phase 1, phase 2. So criteria for phase 1 and phase 2 is same like companies. Simple. Okay. Again, net worth in case of NBFCs, we shall start checking from 31st March 16 and thereafter. Okay, voluntary adoption is not allowed in these 3 cases. Urban banks or rural banks need not apply Ind AS because those are very small banks. Also, if you are covered, your holding subsidiary, joint venture associate will also get covered. Also, comparative shall be given as per Ind AS. Simple. One more category of company was discussed, which was mutual funds. If you are a mutual fund, SEBI via a notification has also applied Ind AS to mutual funds from 1st April 23. Formats have also been given, but the formats are not under your syllabus. You just need to know this information that it is also applicable to the mutual funds. Last but not the least, the last point is the discussion of calculation of net worth. What will net worth include? Capital, reserves, premium, less any negative reserve, less deferred expenditure, less miscellaneous expenditure not written off. But few reserves which are to be ignored. Which one? Revaluation reserve, write back of depreciation, amalgamation reserve. These are reserves to be ignored. Don't consider this. Okay, sir. These were the concepts of introduction to Ind AS, but the special point of this revision is going to be we are also going to discuss some questions as well. So let's revise the question very quickly. I am just going to give an overview of the question. I am not going to discuss the question in detail because this is a revision. Okay, do remember. But yes, if you have studied it once, you will be able to recall everything. The first question was related to net worth. They are saying that they are a listed company. We have to calculate the net worth and tell them under which phase they are falling. So listed hai, but net worth is 505. That means the net worth is exceeding 500. Net worth is of 31st March 14. So they are falling under phase 1. The second point of this question was what if they are unlisted? Doesn't matter. Under phase 1, listed, unlisted, irrespective of that fact, if your net worth is more than 500, you will fall under phase 1. Start applying from 1st April 16. Just remember the sequence 15, 16, 17, 18, 19, right? So 15 was for voluntary, 16, 17 is mandatory. So phase 1 mandatory, 16. Okay. Okay. Next question again was for net worth. Net worth becomes 55. But since it is listed company, it will fall under phase 2. What if it was unlisted? Ind AS is not applicable in that case. Okay. Under illustration number 3, net worth was 600 on 31st March 14. They are falling under phase 1 in this case. And Ind AS once applicable, always applicable. So irrespective of the fact that further the net worth was reduced, doesn't matter. Once applicable, always applicable. Next point. Ind AS, net worth on 31st March 15 was 600. If the net worth on 14, 15 or 16 is more than 500, you will fall under phase 1 because phase 1 starts from 1st April 16. And before this date, if under any financial year net worth is more than 500, starting from 31st March 14, you will fall under phase 1. Okay. Okay. Illustration number 5, a very simple question where B to B, Ind AS become applicable. So to its parent and to its subsidiary, it will also become applicable. Illustration number 6, it was a very simple question where we discussed this question in the example also. You have 2 subsidiaries and this subsidiary has 1 subsidiary, 1 associate. Ind AS become applicable to E. So now what will be the applicability to other companies? So D will also be covered under Ind AS, and F and G, direct parent, direct subsidiary, associate will get covered. But the fellow ones has to be ignored, right? The fellow subsidiary will continue to follow AS. But do you remember? Because Ind AS become applicable to parent, so for the purpose of CFS, these fellow subsidiaries will also have to furnish data as per Ind AS. That means this H and I will follow AS, but for the purpose of CFS, they will have to send data to company D as per Ind AS also. So in this case, do you remember a remedy was available where company H and I can adopt Ind AS voluntarily? Simple. Okay. Illustration number 7, where there was one foreign company which has two Indian subsidiaries. So for foreign companies, Ind AS is not applicable. Please ignore all the criteria for a foreign company. For Indian companies, check individually. X is meeting the criteria, Ind AS became applicable. For Y, it is not meeting the criteria, Ind AS will not be applicable. Last question, illustration number 8, a very good question, right? It says that there is a company Y which is a parent company and company X which is the normal company. Ind AS became applicable to normal company from 1st April 17. So normally what happens is, if it becomes applicable to you, it will also become applicable to your parent. But if your parent is a bank, insurance, NBFC, then you will have to check the respective dates. You will not apply to parent company because of subsidiary if your parent is a NBFC, bank, insurance company. So in this case, the parent was a NBFC. So for parent, we will have to check their respective dates and not apply because of subsidiary. So for subsidiary, it became applicable on 1st April 17. The subsidiary will start preparing financials as per Ind AS. For parent, it is mentioned in the question that the parent's net worth was 400 CR, right? So that means the parent is falling under phase 2. So parent falls under phase 2 and apply from 1st April 19. Sir, how come 1st April 19? Remember the dates now, 15, 16, 17, 18, 19. NBFC's phase 2 is from 1st April 19. So the parent will start falling from 1st April 19 phase 2 as per the respective dates. Now, there is some extra discussion also done here. Now, what is the discussion? Please listen carefully. The parent will apply Ind AS from 1st April 19. That means parent will start preparing SFS and CFS as per Ind AS from 1st April 19. But what about the previous 2 years, 17, 18, 18, 19? This CFS will be prepared as per AS only now, because during these years, Ind AS was not applicable to parent. So during these 2 years, parent will continue applying AS, right? Parent will continue applying AS. Because the parent applies AS in these 2 years, the CFS will be also as per AS. And for the purpose of CFS, we will have to ask X to send the data as per AS only. That means X will have double job to do during these 2 years. X will have to prepare its own financials as per Ind AS. That is fine. But for the purpose of CFS, during these 2 years, it will have to send data to the parent as per AS only, because till then the parent was not covered under Ind AS. Parent was preparing CFS as per AS, so it will ask the subsidiary to send the data as per AS only. Okay, so this was the revision of introduction to Ind AS. I hope this was helpful, and if you like the session, you can put a like button, do subscribe, and also there will be a Telegram link in the description box. You can join the Telegram channel. Okay, so thank you so much everyone. Bye bye everyone. Take care. See you all. Bye bye, and keep revising, keep working hard. Bye bye. So guys, this wraps up our session for today. The last part, because liking the session, subscribing the session, was because it will get also uploaded on YouTube, so that you can watch it multiple times and there are no restrictions on viewing the revision lecture. So revision I will also upload on YouTube as and when required. Okay, so don't worry about it. So till then, thank you so much everyone. I hope you like the session. See you tomorrow. Please let me clarify this to you. The timings will be from 6 to 9:30 maximum cases. Okay, 6 to 9:30. We will try to cover from 6 to 9:30. We might leave early on certain days. Today being the first day, I will leave you early. And if on certain days we feel the content is getting heavy, we will take from 6 to 9. But in the back of your mind, you will keep the classes timing as 6 to 9:30. Okay. So thank you so much. Bye bye everyone. Take care. See you all. Bye bye. Okay. फटाफट से जल्दी से. जल्दी is a Hindi word. जल्दी means quickly. Tell me bye and tada. See you tomorrow. Bye. Yes, bye Naveen, bye Srinivas, bye Supraja, bye Shankar, bye Vijaya, bye Manoj, bye Hima, bye Ajay, bye everyone guys. Okay, bye Vijay Lakshmi, bye Nishita, bye Shankar. Okay, bye Preeti. Bye everyone, take care, see you all, bye bye. Yes, bye bye. Srinivas, that aspect has not been discussed in detail, right? So that aspect is, you can say, still in suspense. Okay, but ideally as per me it should be applicable. Okay, yeah. Okay, Okay, bye everyone, take care, see you all.